Good morning, everyone. Are you violating HIPAA practices, Carl? I hope you fucked that alarm. I mean, it ended up turning off eventually. There's no VUPs here yet. Although Netflix is fucking killing it this morning. Oh shit. I didn't buy nearly enough calls on that. Oh well. The fuck is find something here. Fuck's sake is Netflix. Yeah, I stayed up all night and I'm kind of embarrassed to say why. So I'm gonna leave that. Ooh. Ooh. Netflix bouncing off gamma neutral. It's kind of bullish. Should get a little more. I didn't get stuck in the freezer. Oh fuck it, whatever. I got caught up looking at Beyond and then decided that I didn't like it and fell asleep. It's not my crippling futures addiction. No, not bed and bath. The fake meat. Yeah, I know. You Beyond. I agree. It is embarrassing. However, it does look interesting. There's been a there's been a big shift over like the last 8 days in its options chain. Like all of its Greek values went from like $8 to $10 to like 30 to 40. Well, I hope it's the same as fucking Revlon and it 10x's when I buy options on it. And then this time, instead of buying more options, I can just sell them and never look at it again. I don't know the thing I'm happier about for January 20th. GME might run or my Rev $35 calls will finally expire. SPX gonna go for 38.50 now. Maybe. Don't go to Beyond. You're better than that. Have some self-respect. All right. gaps. Maybe buying the top. We'll see. I just don't want to get stopped out here. All right. Gurgle, how does one make money? How does one make money? Well, you would buy things or sell things for cheaper or more than they should cost, and then you would sell them or buy them back for more or less. This looks like the biggest bull trap. It's the world's slowest bull trap, if it is. This side of the Mississippi. I don't know. It looks kind of okay. Futures are really going for it. But it's still that kind of ridiculous resistance at 38.68, so it could easily, very easily just fail. I think we have like a little bit of momentum on our side, so I'm going to put this stop where it's profitable. And people are still buying more of these, which is probably bullish. GME's doing a thing. Maybe that's our leading indicator. 450K shares now available on IBKR for what? Is Fidelity's borrow rate for GME an example of what you mean by prime borrow rate? It's not. Fidelity's borrow rate is still a retail borrow rate. It just lags. It significantly lags IBKR's borrow rate. Fuck, I can't tell if this is gonna go up more or if it's gonna fail. Hmm. Oh, if we can buy back in cheaper, yeah, won't be able to. Hmm. All right. Where did it go? Oh. I think it's gonna fail the test. I don't know. My shitty straddles, like that fucking leg that I've been carrying for 2 weeks, is finally like up a little bit, and I kind of want to just get rid of it. Ugh. Don't let it fall by the float. Nice entry on MOS. Ooh. Is it? It's kind of like free falling right now. Might go lower. Fucking tease. Fix is cooling a little bit more. Girk, what are the rules when you're done pushing someone's shit and there's some caca on the Jimmy? Is it her responsibility or mine to clean it up? Asking for a friend. Crude, and a bit unrefined. But I feel like if you're already standing, you could at least get a towel. It's okay. I know you're out of practice, Kendra. I mean, ideally, if you have one of those towels steamers in your bathroom, those are great. Win and GILD are doing great. Which one was GILD? Fucking Beyond is up 5% today. Oh, the Tamiflu one? I didn't buy any of that. I should have. Get Beyonds out of your mouth. Listen, it's doing a thing, all right? Consolidation is pretty fucking bullish. Rev up 12%. Prince Aziz has delivered. Who the fuck is Prince Aziz? Gamma Max is literally on the screen, man. It's right there. You talking about the guy who wrote the buyout offer for Rev? I fucking love that guy. Would it be considered rude on her part for not emptying the tank before it went beyond? You know, just because you empty it doesn't mean it's not going to fill back up again, man. Would the deferrals cause a January rally when the deferred shares are finally bought? I'm imagining most ETFs have taken advantage of the 3 month in a row deferral. Yes, it could. I don't know if most ETFs have taken advantage of it, but some probably have. Dude, I'm watching this on my Motorola flip phone. Gamma Max is at 2660 for GME and 2244 for Upstart. I know Baba's up today. Yes. Those are shill Gamma Maxes. I don't think we're gonna cross them today. So they have plenty of time to improve. As the price bounces, more and more people will buy. Are you rich? I mean, I can afford to lose all this money. So, welcome to 2023, the year of prosperity. Fucking better be. When Upstart at MG? GM? Probably not till like next week. Gamma Max is still pretty far away on Upstart. Oh no, I'm getting fucked over again. Why can't SPX get any fucking momentum? Piece of shit. Are the FOMC minutes new or old news? I mean, they're old news. I'm not buying any fucking Bobby double down. Why would I buy into something while it's being diluted? Why is WeBull's 83-cent EPS estimate so high when Fidelity's estimate is negative 14 cents? For what stock? And one might be yearly, one might be quarterly. Greg, I posted this DD on the Discord. 2023 is the Chinese year of the rabbit. Ow. That actually hurt. Hold on. Oh, why isn't my air filter working? I'm gonna die. Hold on. Oh, fucking allergies. Why is it spring in January? All right. Rabbit equals moon in Chinese zodiacology. 2023 equals moon. Okay. I'm working from home and sharing the home office with the wife. She knew right away the Ko-Fi was mine. You have a beautiful relationship, Kendra. Don't fuck it up. Thank you guys. You're allergic to oak. Maple. Actually, I'm probably allergic to oak too. The weather gods know that you have BTU calls. It's true. Gherk investing in salty fake meat now? No, I'm not. But it definitely has a thing going on. I feel like this is pretty obvious. The options positioning on it has shifted drastically in the last like 8 days. It's compelling. I'm not probably buying any. I'm sorry. It's doing some interesting shit. So is Affirm. Affirm's doing some interesting shit too. I guess Upstart kind of is as well today. Not to the same degree, but well, almost. It's up 4.75. That's doing a little better than Affirm. The pressure's building. It's building everywhere. I mean, JB looks pretty decent, right? I like it. SPX is looking to fail another test at 38.42. That's exciting. And futures actually look a little bit better now after the consolidation. So I do worry that we're running out of momentum here, though. WeBull now supports options rolling. Oh, shit. How exciting. You buy some Bobby, viewership will double. Yeah, but I don't want those people here. So Rex code's possible deferrals made you extra bullish on GME. I wouldn't say extra bullish. I'm bullish. I'm excited about being able to test the theory. WeBull announces options rolling feature without debuting the actual feature. WeBull also charges for options now, 55%, 55 cents per. I thought that was only index options. I think I think Weebl's trying to shift to self-clearing. They should be able to. I mean, BNY, I'm surprised they're not already, given that their backing bank is BNY. Now Weeble can chip away at your position by not giving a shit about spreads. Yay. Yeah. Is IBKR free? I mean, it depends on how many options you trade. You created bad mojo. With what? Are you still going on about Bobby? Man, it's fucking dead, alright? I just didn't go full tinfoil super stonk when my bags got heavier. I fucking sold them. Is this upstart price action the result of FTDs? It could be. It doesn't have a lot of FTDs on it today, but it could be. I think mostly it's just following the market and there's not a lot of resistance. Not to jinx it, but it looks like the Jan 13 $13 CSPs I sold on Upstart yesterday might have been a good move. I haven't gotten assigned at the $13 strike yet, and I've been pretty greedy with it. Still don't understand how people lost money on Bobby. That was the easiest play. Holding on for MOASS. It's always the same answer. Looks like you started a high-end bag store looking at your screen. I mean, everything in the fucking market's at like 52 weeks low, man. 52-week lows, man. Bobby financials are horrible and scream bankruptcy. Once RC was out, the only logical play was to get out. I agree. I've been taking days where I don't tune in till I make a successful trade to try and start making money without relying on you. I'm up 65% on my 17 weeklies from the GME bottom. Cheers. Nice, dude. Congratulations. Do you need level 4 options trading for CSPs? No? Unless you're in Canada. Canada, I think you have to have margin to sell CSPs. That's why they don't let you sell them out of your like TFSA accounts. Why did you buy Beyond Weeklies? I said it looked interesting. I didn't say it was bullish. So what Carl Stream was telling you about yesterday's ETF FTDs being due today due to the half day after Thanksgiving. Thoughts? That's possible. Although FTDs don't work the same way. If there was no settlement in the half day, then yeah, that's possible. I can't remember. Was there settlement that day? If that is the case, then Upstart has a fuck ton of FTDs today. Thoughts on downside risk for GME and Upstart as we approach the 18th, SLD, liquidity from Jan OI selling off, etc. It's possible. Hopefully we move hard enough before SLD kicks in that that's not something we have to worry about. SLD doesn't begin till the end of that settlement window, so there was no settlement that day. Yeah, it's possible that the FTDs could be a day off then. Because if you're counting them on charts, then there's going to be a candlestick for that day. But if there's no settlement, then yeah. Are you going to enter positions next week for the potential deferral period? Probably, yeah. You know, I know how to calculate Zemajewski on my own stuff. I don't remember the modifiers, but it takes like 2 seconds to look them up. Jan 27th is 60 trading days after the Hallow Sneeze. What the fuck is a Hallow Sneeze? Can I not get fills on WeBull if I didn't buy the WeBull options data? And you can get fills, but your options data is going to be 15 minutes delayed. If you're trading options, you need to pay for live options data. It's a necessity. Oh, the Halloween sneeze. Oh. I trade options blind. It's more fun. Oh, you're paper trading on Webull? Um, I don't know. I mean, you could just use delayed data, I guess. But yeah, you'd still want to pay for data. It's only like $2 a month. It's not very expensive. Oh, this is very exciting. Futures have broken 38.68. I'm feeling some kind of way about this. 38.50 is like the biggest positive gamma strike right now. Well, close to us. 4,000 has a ton of OI, but that's for Jan 20th. I'm curious what the effective expiration of all those out of the money Jan 20 puts on GME will have. I'll tell you right now, nothing. Absolutely fucking nothing. They're not hedged. They're worthless. They are used to hedge volatility baskets, mostly sold. Where would you recommend paying for this data that you speak of? Like, real-time options pricing? Almost every broker has an option for that. Some of them just give you real-time options pricing. Some of them charge for it. I think like IBKR and Webull definitely charge for it. I think TDA and Fidelity give it to you for free. I mean, it's not disappointing. It's good that they exist, right? Because they're evidence of volatility hedging, right? But yeah, they are mostly sold and now almost worthless. Think about it this way: if Jimmy runs, right, which it has in the past, and IV goes up significantly, the value of those like 237.50 contracts and the value of those like 50-cent puts rises quite a bit, right? These have no delta, right? So all of their value is extrinsic. And you can sell large quantities of these provided there's a buyer. Somebody hedging volatility would want to buy them. And you can sell large quantities of them, and they will just eventually be worth nothing. Are you able to get shift search working again? I don't do. Oh, Ben, thank you so much, man. All good, dude. Welcome back. I appreciate it, man.
$99 straight to Kirk's pocket. He's gotta be a shill cause he's taking all my money. Think he's got a gun to my head. DRS is the devil, he said. Pigeon whales are the highest class of society.
Check the That's kind of fun. Yeah, I see that. Where can you buy volatility baskets? What aisle are they normally in? They're they're what they use to hedge volatility swaps, or they're replicating a volatility swap in the options chain, right? Yeah, I heard about them supporting options rolling. Well, they have it, but they haven't rolled it out yet, ironically. SPX is looking a little bit better today after the extremely weird positioning that occurred yesterday. A lot of people are going long SPX yesterday, but they were going long by selling puts. Seeing quite a bit of shares return for retail borrowing. Hopefully, it's indicative of no longer needing to suppress the price. I hope so. Although I don't think we're seeing a lot of shares being returned. I think our definitions of a lot are different, maybe. No, most of the out of the money or the like out of the money contracts on Bobby were sold during the August run. So like the dupes and the far out of the money leaps were sold during the August run. My biggest problem with Bobby is that IV hasn't gone down, right? So there's no evidence of volatility shorting, which means that someone's just shorting it, which is not ideal. How are we looking on SPX for today and throughout the week? I think it looks pretty good. Yeah, I went over that. I'm ready for Upstart and Beyond, my new favorite stock. Oh God, why? There's no Beyond thesis. You simple man. Fake meat is not hot. I did say it was interesting. That doesn't mean I'm bullish on it. I just said it was interesting. I do like HBM July options. Oh, I don't like options on that at all. Yeah, the options suck. The strikes are too far apart. And July's not enough time for 750, unfortunately. And it doesn't have leaps, yeah. I'm not I own no Beyond shares or options. If it had stayed on Reg Show, I might have been more interested. Carl, are you around? Are you pretending to do your job? While you're pretending to do your job, do you want to pull an FTD report for Beyond? I've got your Beyond thesis right here. How many people do you know that eat it? Zero. But if the market fairly evaluated every company based on its fundamental or like intrinsic worth, GME would be $5. So maybe not the best approach to making assumptions. If I give you the FTD report before Kyle, his name's Carl. Can I take his job? No. Me and Carl have something that me and you probably can't have. Chinese spaghetti. Pictures of each other in embarrassing situations. Or, well, compromising at least. Yep. The used car auctions are bustling, which means prices are probably going to start to go down soon. Will you mod or quant me? Probably not. Mutually assured destruction. Yes. I'm gonna start vacuuming Carl's room next week. I can stop by and do yours too if you send me the Beyond DD before posting in Discord. There is no Beyond DD. No, Carvana. One of the reasons is because Carvana is dumping their inventory like crazy. I just made 16% on SPX calls with trailing stops on my paper trading account. Are we twins now? I mean, it sounds like you just did you just ghost the option I bought? Congratulations. Yep. I just looked over and mine's also at 16%. We're not twins anymore. Haha. Okay, thanks, Carl. The problem I have with Beyond is that it looks like short exhaustion, not a run. So I think the price can go up, but I don't think it's going to go up a lot. And then I think it's going to get shorted really, really hard at the top. I think SPX is going to do it. It's going to do it big. Future looking bullish. It was on reg show for a long time. Fuck. Why'd you show me that, Carl? Oh, son of a bitch. DMs for TA on Beyond. Oh, nice. Fake news. Check out PHGE. Is that the one we were talking about last night? I think I have it pulled up somewhere. Yeah, it's moving up pretty hard today too. I don't like not having options though, and I'm worried about their shelf offers. Do you want me to share that? Do you have the ETF ones? Do you want me to send you a list? Alright, I got stopped out. Is that the end of the run? I don't actually know. For a potential GME run, is there a downside to just playing highly sensitive Vega position, Jan 24 127.50 calls, and not buying more delta sensitive positions like Jan 24 40s? I'm just trying to compare the pros and cons. Thanks for all you do. Yes, because there's an advantage in not betting on the delta, right? And so since you're not paying for any intrinsic value, you only care about large spikes in volatility versus spikes in price, right? And so you're very unlikely to lose a significant amount of the value, provided you don't buy them when IV is high. And thus would be able to close them with fewer losses in the event that nothing occurred. By buying intrinsic value, you're exposing yourself to near-term price action. So if the price drops, you're going to lose a lot of value in your option. Whereas, the price dropping is not necessarily indicative of the IV going down. IV tends to drop on GME at a much slower rate than the actual price. Agreed, agreed. And I'll take a position on the 13th day, if anything. Oh, okay. It looks interesting. I know it's got fails. Uh, but yeah, remember when you're buying into a penny stock like that doesn't have any options, right? You're super exposed to like big price swings because you have to buy so much leverage to make any reasonable amount of profit, right? Profit on both SPX call and a put. Is this pod racing? How'd you profit on an SPX put today? Like in the last hour? The bottom right ticker? That's just a SPX contract. Futures are looking pretty good. Huh. Like still cooling, down another 2%, 2.7% today. Get rid of this one. How do I remove that? There we go. Maybe we have a test of like 37.82 in us. The gamma flip point's at 38.72. So there's a good chance this could fail. I just don't know if like our momentum is dead yet. I don't think it is. Let me look at and see how options positioning has changed. Okay, so yeah, I mean it's pretty bullish through the gamma flip point. Zero DTEs look pretty strong too. A little weakness at 38.55, but we're past that. So 38.60, 65, 70, 75. Yeah. I mean, it looks pretty strong, actually. I think we can move through. We might actually have enough momentum to flip and once it does, then the weight of that hedge is enormous. What's a good price for upstart shares in the near and medium term? The like $12-13 range is very, very cheap right now. We seem to have a lot of support there. That could change, but right now, I would say in the long term, you might be able to target a little lower, maybe around 10 or 8, as we approach, or well, probably after next earnings. Although who knows? I mean, Upstart could surprise us. They were discussing last quarter that they were going to start moving into business and auto loans. We don't know how much expansion has occurred there over the course of this quarter, but it could be significant. Remember, they're very, very profitable on sales. So their per dollar in sales nets them like 55 cents in revenue. How would one hedge get like SPX 3850 on an approach of the gamma flip point? If you're worried about a rejection of the gamma flip point, which I'm not particularly right now, but yeah, you would wanna probably pick up a put as it approaches the test. And then if it breaks through, you would close it. If it, fails, it gives you a chance to like stop out of your long side and then protect your downside. I don't know if you can do that in paper trading. I mean, I've never used Webull's paper trading feature, so I really don't know. And when I like the paper trading I did use when I was doing it is drastically changed from then till now. I used to have to like do my options on a piece of paper because nothing offered like options paper trading. I am bullish on Upstart into the end of the year when the credit markets stabilize, but I still think they have another bad earnings ahead of them. And given how much they were shorted, I mean they were shorted significantly more than I assumed they would be uh into this last earnings and following it, right? So you have to take that into account. The weight of the short position is enormous. uh Upstart should never really trade below its book value. They're not at risk of going bankrupt at all, right? But they're very close already, and I could see them pushing it below. You know what happens when you assume? I mean, you have to make assumptions. That's how this all works. Upstart program needs to work for higher interest rates. It just needs a more liquid credit environment, right? Because if they can shed the current loan balance they're carrying, right? That's going to reduce their liabilities and drive up their book value. And then they're also going to, have far more options as far as, people getting loans, which is going to increase their, sales and revenue. But for a stable credit market, we need the Fed to stop raising rates. Well, that's because there's a correlation between the cost of loans and the price of the things you get loans on, right? Interest rates go up, but then, cost of goods either stabilizes or drops. So you're getting a higher interest rate loan, right? Like on a house or a car, but the price of the house or the car would be cheaper. Because the first thing that happens is demand drops, right? Which creates too much inventory, right? And then when you have too much inventory, you have to discount it to get rid of it. When do you believe the upstart catalyst can be realized? Well, I'm hoping over the next couple weeks alongside GME. SPX about to get rejected? I mean, yeah, it did. Wait, when did you write that? Accurate. Um, Although I don't think it'll last. I think momentum still is favoring, like Hall said. CC's risky, like too early for GME. Yeah. This Friday, not so bad, but you probably want to be out of the money. My spy calls got stopped out. Is it too risky to buy back in? You may want to wait for SPX to test the flip point, and then you could move into something with like a little more theta if it breaks above, right? Because then you can kind of catch that wave of momentum from the hedge flipping. Premiums are worthless for this Friday. I know they are. And the price at which you'd have to sell them is also pretty worthless. Because you'd want to be ideally you'd want to be above delta neutral, but you definitely want to at least be above gamma, and that's yeah, they're pretty fucking valueless. Straddling FOMC? No, we already know the results of the meeting. I think we'll see like an effect, like we'll see some volatility a little bit, but they're not even pricing volatility into tomorrow's contracts. They're just pricing them into today. Like today's contracts are trading at like 40% implied volatility. Tomorrow's are trading at like 25 at the money, right? So they're not even pricing in a lot of volatility. By the way, in that instance, it's better to buy 1 DTEs than it is to overpay for 0 DTEs. Gamma flip points of 38.72.50, I believe. Let me double check. 38.67.50. So we're actually just at the gamma flip point right now. So we'll either break up or we won't at this point. Is there new info? Yeah, I suggest if you want Wessel's creations, I suggest you look at the announcements in Discord and watch the member stream from over the weekend. We go pretty in depth with a lot of it. No, I don't, Kyle. Are you still positioned long? For SPX? Yeah. So $1 contract is not worth it. $1 a contract? What's $1 a contract? Jan 6th. You'd have to sell like at the money for you wouldn't even get $1 at the money. Company I've been watching and I'm bullish on drop 45% overnight on news that they're delaying their new tech. What would be a safe way to start buying in? Slightly in the money CSPs? Yeah, you could do that. If you're comfortable with the strike minus premium as a buy-in price. That's a really big drop. I would expect some volatility to follow it. Price go up and my puts go up. What do? I don't know what the fuck you're talking about. You have zero DTE puts? Is that what's happening? How big is the fucking hedge on this? 225.94 million per dollar. So on the day we have almost like a $10 billion hedge. Yeah, I think we're gonna push up more, maybe to like the 38.75 strike. Yeah, yeah, I think we're gonna see a little bit higher move here. Technically, we could move a lot higher, but at least for the next like 30 minutes or so. So you had 9K ready to roll on Jimmy. Do you like CSPs or shares better? Uh, the problem with CSPs here is you may not get assigned, right? Because the price is already so low. It's likely that the price is going to experience some recovery, right? 30s, right? What are you selling 30s for? Why are you selling 30s at the bottom, man? Ticker is ENVX if you want more details. I really want to pump the stock, but having you yell it out to the whole stream. Ah, okay. Well, you probably could have just DM'd me that. Don't worry. I'm probably not going to buy into anything that just dropped 45% overnight without doing a very significant amount of research. Straddle's end of day for tomorrow's data. The data tomorrow, Friday, expected to have any effect in the market. Yeah. Jobs data is gonna be important. Can jobless claims do much damage to the SPY tomorrow? Yes. Yeah, there's going to be a lot of additional weight put on labor data over the next probably couple months. Since inflation is cooling, market participants are going to look to the next data point that the Fed blames higher rates on, right? Do you believe if OPEC's obligations were pushed out via deferrals, we will see other shorted stocks run alongside GME during the Jan 12th to Jan 18th period if this is realized? I haven't backtested the correlation on anything besides GME, but yes, provided that the same process is involved, then I would expect to see the same result. To the random mod, thanks for popping my cherry yesterday with the timeout in the Discord. Shockingly, it was my first ever timeout. I mean, it had to have been Carl. It's just say Carl. It's always Carl. Carl's the one who times everyone out, and he just timed you out in the chat. Still think D is in phase B. What? Oh, D. I get what you mean now. Hmm. It may be moving into C. There's some room on this upside move. I'd watch 67 pretty carefully. That was timed out when I jokingly said you were bald. I don't ever time anyone out, so it's got to be Carl. Carl doesn't like bald jokes. You can see why, I'm sure. Would you consider that a boomer stock? I mean, yes. How's their FCF? That's something I'd be interested in. I mean, they have a very nice dividend. Remember, yeah. Huge float. Profit margins are going back up. I'm guessing that some of their liabilities became current recently. Oh, cash flow just dropped off really hard in quarter two. Yeah, there's definitely some seasonality here as well. Um, but it does look like their cash flow is slowly improving. Hmm. Assets are improving. Have they made any acquisitions recently? Acquisitions will be good. If they're not spending their, I mean, they're doing a dividend, but if they're spending the rest of their money on acquisitions, that's pretty bullish. I haven't looked a lot into them. They sold a huge plant. Okay. Oh no. I got stopped out. Maybe that was perfect actually. Cuba's having a nice recovery today. Sorry, I got a lot of things going on here. Okay. Can't time this out, Carl. Hashtag owned. Nice. Adopted by. You got him. You got him good. There's nothing bogus about the walk up, man. Everyone else sold their puts yesterday. The only way you're gonna beat the market buying puts every day, Dan Weeklies, is to shift to Dan Monthlies. Maybe it's time for you to evolve. Do you have any exposure or hot takes to hydrogen? No, I don't. I don't have any hot takes on it, and I don't have any exposure to it. It's not something I'm particularly interested in right now. I mean, outside of industrial use, I don't think the demand is crazy. Are you talking about like hydrogen for fuel cells? Because that's probably a few years out from being interesting. Can Biden rug the market with his economic outlook? What time's it at? Show us some new numbers on a hydrogen engine, I think. I mean, but there's no infrastructure for those, right? So it's again years away from being interesting. No, we're still above the flip point, actually. I got stopped out, mostly just on a gap down in the contract. And my stop was pretty tight already, but no, I think the market looks like it could keep going up. But I have other calls. I still have the calls that I've been rolling and carrying since like last week. Some of which are now in the money, some of which are not yet in the money and are still sitting on a pretty decent loss. What would be the reason for the MM removing weeklies on Sava? Lower interest. Oh, speaking of which, how are my Sava CSPs doing? Oh, yes. We're gonna fucking buy those back. Sell more? Ooh, the pricing is going up. God, the IV on fucking Sava is nuts. You have to be careful with it though. It's really, really, really volatile. Well, obviously. Fuck. 10% yields for fucking 16 days is nuts. It's greedy as shit though. I guess I could just take the lower, like 2250. What's the yield on that? 67. It's like 7.4% yield? 7.4% yield. What's the chance of assignment? Hmm. 16 days? 16 days. 7.4%. So it's 7,500. Fuck, man. I don't. I guess I could buy them back before SLD. Did you see my serious question earlier? No? What was it? Yeah, I use margin. I mean, it depends on what account, but some accounts and certain things you have to use margin. There's option strategies that you can't use without it. 450K shares IBKR returned. For what stock? Is it for Upstart or GME? I mean, it's a little more relevant on Upstart because of the smaller float size. 450K shares returned on GME is meaningless. Check out Jimmy 124.15 CSVs. Can turn around and buy 124.20 Cs. Man, these would have been better the other day. They're not. They're okay. Hmm. Although you could sell in October and buy in Jan. Male pattern baldness is keeping the baby oil industry up. Something about looking like you just exited the womb makes all the difference. Hashtag game on, Carl. Is Carl using baby oil to comb over? I thought he shaved his head. Or is he just shining it? Are people interested in H2 internal combustion engines or something else? Oh geez, this can't be workable. The combustion is insane. It eats all the affordable metals if it's anywhere near stoichiometry? I'm not familiar with that term. SLD a particular week every month? Do you know where I can find a schedule? I've been Googling, but not finding. Yeah, deposits begin the Wednesday before the monthly options expiration. Check out Bobby options. Over a 120K options sold or moved. What gives? Okay, that's kind of interesting. I'll take a look. Looks like a significant amount of like June 23 and Jan 6th calls were sold off. Or simply sold. And then Jan 20th and 13 Jan 20th calls bought. Jan 8th sold. Jan 24th $8 calls are sold. Jan 24.45. I mean, these are all estimates, but it looks like people sold off a lot of nearer dated calls, and some of them were rolled out. So somebody moving either, I don't really know if it's a long side position. It looks like someone's moving a big sold strangle, like a short strangle. Somebody doesn't expect the price to do a lot in the near term, I guess, or they just are approaching expiration. CLVR 2.5 Jan CSP selling for 225 at the mid. If I'm bullish on CLVR long term, I'm getting in for 25 cents, right? Come on, I'm dumb and I need reassurance. Well, so if you're receiving 225 credit on a 250 assignment, then yes, but obviously the company's being priced for bankruptcy, at least by the market maker at that point. Stoichiometry? Stoichiometry? Okay. DMs? What do you got? What's this for? Oh, beyond ETF FTDs? Okay, that's not as exciting as I thought it would be, but it's interesting. I'm guessing that's where they approached getting it off of RegShow. I really don't know how much potential it has. That's my biggest concern with it. Rate of FTDs is increasing. Well, I mean, if the options positioning forces more failures, that'll be no, the rate of failures isn't bad. I'd want to see it go back on RegShow though. What's this? Oh, you know we have this turd. We already calculate this. It's interesting. This is 2 days old though. This is from Monday. A lot of the negative delta around like 3800 and 3790 yesterday sold off. And there's more positive delta between 3840 and 3880 now. You have to estimate it. Fuel and an oxidizer at an ideal ratio, but in fact it's not desirable, and less so if the fuel burns hot like hydrogen does. NOx emission woes on top also. Oh, okay. So higher heat combustion is a lower lifespan engine, basically. Your options data hasn't updated yet. It just happened at 11:57. My options data is updated for 11:57. I have everything well for flow I have everything up to 11:52. There's only 83,000 negative delta bought inputs. You're worried about the $16 puts on GME? Are you worried they'll try to get it down there this week? Not particularly. Some of those are mine, so no. I don't see 15K blocks being sold. No? There's a small bump at like 11:47. Uh, Let me check. I'll check the time in sales. There's a obscene amount of Jan 24 $8 puts being sold like or being bought every few minutes for like the last 2 hours. I don't see a significant amount of flow out of Philly. I never talk about GME puts before, and you have them? Of course I have them. I have. I've discussed buying protective puts on GME several times. No one ever listens to me, but in theory, one could set up a straddle at any point in time when narrow consolidation is found, and I'm sure of a direction, then profit off of the move by killing the losing leg. Yes. Absolutely. Yes, you absolutely can. Like right now, where we're trading sideways, this is a good opportunity to straddle. Or a very tight strangle. I sent it to you in DMs. So a significant amount of puts rolled up from the $1 to $2 strike. I don't have Fidelity open right now. I've gone over in the money puts repeatedly and protective puts. Superman. I have sold some too, yeah. I have sold puts at 15 and 16. Do you guys just think I'm sitting on like a massive GME position without hedging it? Is that the hedge your fucking shit? What do you want me to tell you? That would be stupid. That would be very stupid, right? Looks like a bull put spread. I'm not. No. Well, maybe. I would say that the order size is too large to assume positioning right now. You'd have to wait for the update in the OI at the end of day. I wouldn't try to assume that it's a bull put spread here. It could very easily just be rolling a $1 put position up to $2. Could we talk a little bit about selling Jan 16 1750p and buying Feb 2250C for net credit and the potential risk? And the potential risk is assignment at 1750 for $1,700, $1,750. But yeah, that's the risk. It's a calendar spread. After Jan 16, if the put expires, then you're simply left with the long position. In the short term, you have better Vega on the Fed position, so you have slight sensitivity to implied volatility. You have puts on GME right now. I assumed you'd be sitting on your shares down at this price. I have $10 and $15 puts that I bought for 2024 back in August. And then I have in the money puts at 25 and 30, also bought back in August. My $55 puts from August are gone. I sold those. And then I have sold puts at 15 and 16 for January 20th. I mean, most of the puts that I have are old. I've had them for a while. When it runs, you buy puts and sell calls. Do you know how cheap a $20 put is when we're trading at $50? And the IV on them's high, but if you buy them far enough out, you can dodge a lot of that. They're up. Generally, I wait for like a bounce. But one day there might not be one, right? So it's good to have those to be able to exercise. I don't really use enterprise value when considering, well, at least short-term trades, Stefan. When entering a straddle, are both legs bought on the same candle for same strike? Or are you attempting to buy the outer bounds of the consolidation, thus spreading out your buying? Ideally, yeah, say you're targeting like 38.65, right? For your straddle, like that's the price that you want to enter at. And as price fluctuates above and below the strike, you'd want to enter puts on the high end and calls on the low end. This way you're buying both options out of the money instead of, if you enter both positions here, you're buying in the money calls and you're buying out of the money puts, right? So yeah, if you can spread out your entry, the only time that's a problem is if you have like a large straddle, which you're probably not gonna have too many contracts on SPX, but on other stocks, you might have a much larger straddle and a lot more leverage. And in those instances, sometimes it's better to just buy the strike you want right away and not dick around with trying to slowly enter it over time. Because otherwise you may not get a large enough position quickly enough, right? Pigeon Mill should at least be privy to these details. I've talked about it a bunch in the past. Yeah, well, we didn't actually hit 50. We just came close. You went a year telling us not to buy puts on GME. I said not to buy out of the money puts when IV was elevated. Because they lose their volatility value faster than the price of the stock drops. I have multiple videos going over, you know, how to use your long calls to hedge your covered call entry, and then how to use the credit from your covered call entry to buy puts that are in the money. Dear fucking God, no one listens to anything. You can't hurt the price. You don't have any fucking money. Ooh, Upstart's doing a thing. Thanks to me. You lost your own money. I didn't fucking hit buy and sell on your broker account. Here comes Greg 5 shares buying a put and taking GME again. It's just mirroring the short volatility positioning. And yeah, I have talked about it. Bipolar bear. I mean, I should use my CC premium to buy end of chain weeklies. Is Popcorn Trader wrong? No, he couldn't be. He's frequently wrong. At the top of runs, when GME runs, right? Say your long calls here. I'll explain it again. Right? You can then use your long calls to hedge your covered calls. So you can sell your covered calls here in the money. Once you've confirmed a peak, you can close your long calls. You can then use the credit from your covered calls to buy like 0.6 to 0.8 delta puts. Because there's no extrinsic value on these, right? Because they're deep in the money. So the IV on them is low. And you need like 180 DTE ideally in order to get rid of the rest of the extrinsic value. I've been over this so many fucking times. You have hedge funds doing this with billions of dollars. If you think your effect is going to be significant, it's ridiculous. I'm literally never wrong. Name one time I was wrong. CERN puts. One put per 120 shares, around 0.6 delta in the money for 180 DTE. It's like one per 130. It depends on how much delta you get. I know you've been over this before. Then what the fuck are you? What are you yelling at me about? What are you complaining about? Futures look pretty good. A 39.11 would be the next really significant resistance. We could fail before then though. 3900's been a failure point in the past recently. Like 39.02. I don't know if futures has enough momentum right now. Have you bought GME puts outside of the August run? Like, I get to play during the run. I'm just trying to figure out how to deal with these long dry spells between runs. I mean, that's what you have the long dated puts for, right? Like the in the money puts, because you have like 180 DTE on them, and then when they're done shorting GameStop, you can close them, and then you can use that money to buy shares and calls. Right? This is it's that's why I keep telling people, like, focus on one position and manage it properly. If that position is GME, then manage it correctly. That's because I just hedge the downside. I mean, I don't. I trade momentum, and generally speaking, downside momentum is rare. But I buy puts. No, I didn't buy puts when I believed in MOASS. Unfortunately, I didn't hedge my GME position at all when I fucking believed in MOASS. Which didn't lead to any realized losses, but it definitely led to me not making a lot of money on my GameStop. If I could go back to last year, I'd sell so many more fucking covered calls. Thanks for your advice. I bought some GME protective puts just now. Great. Awesome. Good job buying puts at the bottom. Congratulations. 8 of the 10 stocks in the list I sent you are up significantly, and the 2 that aren't up are just chopping. So I still go up in the near future. I might be learning some things finally. Cool, man. I mean, the market's also up today, so how much of that is a repricing of the individual equities versus just, an overall increase in indices? I still don't think any of them have any growth catalysts, but you don't buy puts at the fucking bottom. The point of buying the puts is to hedge your long position. Have any of you guys actually read Options as a Strategic Investment? Do you not know what a protective put is? Jimmy might actually run if we all bought puts. Possibly. But a bunch were up yesterday when the market was down, but thought that might just be random. A lot of them are in Dow too. So don't forget the index. With regards to growth catalyst, that wasn't a consideration of mine initially. I know. That's why you sent me a list of boomer stocks that aren't doing anything but giving their money away right now, or buying back shares. I mean, it's not a bad thing. It's just an effect of the current economic climate. I still think it would be better if they were targeting acquisitions, especially with so many things dropping dropping value over the last like 3 months. I think there's in a lot of those sectors, there's some very good acquisition targets that would help improve their revenues instead of. I'm not a big fan of share buybacks. I'm not really a big fan of dividends either. I prefer to buy into growth. I finished chapter 1 on Monday. Nice. It's an investment. Long dated in the money covered call, same like protective put, to an extent. A protective put is what you buy at the bottom to boost your margins so you can spend it all on calls. Hedging costs extra money. I mean, no, because if you're hedging, you're making more money. It's a put position to protect your long side losses. Example, you buy 100 shares at 10, the stock goes at 15 but peaks, and volume is dying. You buy a $15 protective put to protect your long shares. Yep. How does one hedge? And is that different than YOLO or full port? Oh, Jesus Christ. EPAM reversal on the 2 hour, testing the trend. Uh, Nasdaq's up today, so probably. Yeah, EPAM looks good. I think it may have found a bottom here. Expensive. 30, 50, 63 would be the next upside target, and then 30 or 350, 63, and then 374 after that. I'd be careful. It doesn't look like it has a ton of momentum just yet. Or the momentum might be waning. It is at a nearer term resistance. So maybe at least confirm a break of like 30, 40. I don't know if you can get any options on it. You usually can't. Usually the spreads are shit. I think half the chat doesn't understand that if you have shares and own a put, the put gives you a right to sell 100 of your shares at the strike. That's correct. What is Upstart up to right now? Where do you think Tesla hits on the bounce? Oh yeah, so we were discussing Tesla being a bit oversold yesterday. We got a double bottom here. Well, at least starting to form. I wouldn't expect Tesla to go much higher than like 141. It could retest the lower bound of that long-term trend. Um, which would be, hold on. That'd be like around 150. It's possible, but I would expect shorts to re-leverage pretty quickly. Also, long-term holders of Tesla have been selling it quite a lot lately, so the liquidity is sky high. Like Tesla is more liquid now than it was at the peak of its run in November of 2021. This is me asking you to tell me how stupid you think I am for my bullishness on an ORMP. By the way, thanks again for all you do. Never taken for granted. No problem, man. ORMP. Um, it's at resistance right now. I think it could get rejected here. Although it has some pretty interesting volatility spikes are fucking crazy. Yeah, it looks like, intraday volatility on it can pick up quite a lot. I would definitely say it's currently at resistance. If it breaks above 14, that would be pretty bullish. But it may get rejected here. I have a feeling this is for earnings. When was earnings? Earnings is tonight. I'd be careful with it. It looks like their margins are improving slightly, but their margins are awful. So I don't know if a beat is out of the question, but maybe. They've never really had good profit margins. I don't really like bio stocks. It just looks like a lot of cash burn. But I guess if their earnings are better, then yeah. I mean, I feel like you're just playing earnings though. I just hedged my 5 shares with 5 shorts. Oh Jesus. Upstart July 21 35p is traded. Okay. Sold? Uh, we're at the mid. Barrett's looking pretty nice on ORMP. Ivy looks elevated, yeah. I think there's some accumulation going on, like on a longer term time frame. So yeah, buy rights might not be terrible, but I wouldn't buy it now, right? I'd wait for a rejection. What do you got, Dork? That's interesting. Yeah, getting spicy. What's Upstart look like? You want to run Upstart real quick? Apple looks good for a bounce. It just tapped its long-term trend. Oh, okay. Yeah, so. What do you think of that, Dork? Do you have that on like the 1 hour? I hate it when you send me charts for the 1 minute. Okay. Yeah, huh. So interesting. So you think we start maybe seeing our price action 5 days in advance of the settlement date as they cover second market liquidity? Fuck. I don't start buying shit yet. Why would the ETF management care about T+5 though? Maybe they cover their short-term vol shorts before the big dump. I still think this is an effect of possibly an effect of the FTDs from yesterday. Volume's significantly better today, so. Also, the pre-market rise in price is pretty indicative. But we don't have consistency in the ETF FTDs. The ETF FTDs due tomorrow fall off. But then we have 3 million ETF FTDs for the 18th. Or from 11/18. T5 might be important to chain liquidity. Creation, redemption, arbitrage. Okay. The arbitrage part makes sense. Happy New Year. Thanks for everything, Dad. I'm considering averaging down my upstart. Cost basis is 20. Should I wait or just FOMO right now? Um, obviously you don't want to just FOMO. It depends on your time horizon. If you're buying it for the near term, then the current price isn't awful, right? It's a little higher than what we've been trading at for the last few days, and there's a dip in ETF FTDs, which could see a decline in price. However, uh, we may not, given how illiquid it already is. So if I were buying for a shorter term time horizon, I wouldn't care so much about a $14 cost basis. But if I were buying for a long term for like the buy and hold, then I would want to get it cheaper. Jimmy runs to 45 during Jan 23 OPEX. Good play is sell calls. CCs in the money are owned. Then buy some 0.7 delta puts for Jan 24, maybe June 23. Yeah, for every like 120 or 130 shares you have. That should be true on any stock you own that has a bout of over exuberance, right? Where price increases dramatically in a very short period of time. I just want to confirm my understanding is correct. It is. And then when you close those puts, you can then you know, when we've reached a bottom 2 or 3 months later. You can then convert that capital into CSPs, right? And then you can use the credit from those CSPs to then buy long calls, right? So synthetic short at the top, synthetic long at the bottom, right? Is that just to get capital for calls later? Yeah. That offsets your losses, but it's not intended to be completely delta neutral. Jimmy is not going to run to 45. It will run to 100. Or not at all. I don't think it'll run to 100. Technical analysis of the financial markets have a very good how-to trend line section. I don't know. I don't think so. I haven't read that book in like 6 years, but I mean, it covers how to draw them and where to place them. I don't think it's very in depth, but it at least indicates the basics. I think he prefers fibs, which I don't like. If Jimmy ran to 100 and make roughly 14K, can you please show us your Apple trend lines? Uh, where the fuck is my Apple chart? Boom, 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 boom. Oh, there we go. Oh, this looks like it's gonna slip. Gamma flip is still at 38.62. Hold on, I need to check where the gamma flip point is, because if this slips, it's gonna probably slip quite a bit. Is this starting to look like some long side capitulation? Gamma flip point moved up. Okay, so we're still below it. I would watch out here. Yeah, I think this can move down maybe back to like 38.52, so like a $7 drop, although I guess technically it could move just below 38.52. Futures Futures is still selling off a bit. We'll have to see if 38.68 acts as a support, or if we find support higher here at 38.80. Right now, I would say both are possible. But we might have some like delta neutral positioning as well, right into the FOMC minutes, and we may get a pullback to like a little lower level. Nice pigeon teeth. You're making more stream cards than I have streams. I like it. Jesus fucking Christ, what's going on with my phone? This reminds me of the big guy short Coinbase from 150 to 50, and then in one day it went from 50 to 110. Yeah, I mean that was also backed by like a big upswing in Bitcoin too, right? If Jimmy runs to 100 and I only make 14k, I hope I get kicked off this stream. If Jimmy runs to 100, maybe I'm done with this fucking stream. Someone got a hold of a minute ahead of time, and jobs data was not good this AM. Yeah, the jobs data was not great. But the positioning is still pretty bullish. I think we're seeing some zero DTE capitulation here, but I don't think we're not seeing like a big build up in short positioning. Probably just drop to the lower end of, you know, where everyone is straddling, which is probably around 38.50. Price anchoring. 400, that's $400 before the split, right? I'm gonna be selling some deep in the money fucking cover calls if that happens. No, the jobs data wasn't. It's not that the data was poor. The jobs data was, I mean, continues to show a strong labor market. Jolt's openings were up, right? Or, well, significantly above the forecast. Like barely a drop from the previous month. Um, Manufacturing employment is also up. Yeah, jobs data was robust, so the Fed can do damage. Agreed. I really don't think we're going to see a significant improvement in jobs data until we start to see some margin contraction and more layoffs. Stopped on my SPY calls at 120.77% profit. Fuck yeah. Why do I trouble myself losing money on the basket every OPEX? Because the risk reward is significantly greater. Are you straddling into the minutes today? I don't, probably not. I would have done it with zero DTs, but they're overpriced. I guess I could pick up one before the minutes and hold it into tomorrow. Sounds like you're mulling some upstart stuff earlier. What are you thinking? Well, there's a 3-day gap in the FTDs, so if today's price action is the result of ETF FTDs being cleared to some degree, then the next ETF FTD day is a lot bigger, 3 times the size. This would be like 1.9 million ETF FTDs. The next one's like 3 million. 3 point. It might be. Sorry, I think it's higher than 3 million. 3.05 million. So not quite 3x. Not even 2x. Almost 2x. Sorry, but the 29th FTDs are 5.395 million, which is a lot. That is 3x. Well, if settlement's delayed by the Thanksgiving thing, then the 11/18 ones would be due on the 9th. Wait. 1, 2. Yeah, they'd be due the morning of the 9th. And then the 29th ones would be due on 1, 2, 3, 5. 1, 2, 3, 4. The morning of the 16th or 17th, but I'll have to check that against the chart. Why are people talking about Jamie returning to 100? Is it act like Super Stock Day? Story's still the same as last week, and be careful with SLD. Yeah, nothing's changed. People are just being weird. Overly bullish. I don't know what it is. It's probably a good thing if sentiment's shifting that way. It means more calls, right? What's up, Ando? Why is Baba running? China's opening back up. Slowly but consistently. And they had some news today, I think, also. I don't know what the fuck it was, but someone said something about it. Chinese regulators approved a capital expansion plan for the Ant Group, which is Baba's finance affiliate. The Ant Group's allowed to raise 1.5 billion for consumer finance. No, those FTDs occur after the half day, so I don't think you need to add one. I think it's just the 17th. I don't have a favorite stock related ratio, Stefan. I don't have favorite anythings except VWAP. CCP is gonna save the real estate industry. You playing these 0 DTE for the Fed minutes? No. Probably not. Unless I see a good opportunity to enter a straddle, I'm probably not gonna play anything for the Fed minutes till after. Probably a symptom of our current price action as well. Hard to not see some upside at these levels. I agree. Generally, it's the low price that begets more call buyers, right? These are like, that's like the initial stages of what drives our larger OPEX runs, right? Not the driver of like the volume, and well, not the driver of the initial volume, not the catalyst, right? But that's what continues price action, is the low prices attracting call buyers. Can you explain what VWAP is? It's volume weighted average price. If Jimmy hits 1775, I can retire early, probably around 84 years old. Nice. I wish you the best, Sploosh. But I don't like speaking for him, hence the recommendation. Oh. In the past, Jimmy might not run to 100, but RevRQ might run to 100 cents. It it did recently, right? I mean, RevRQ is pretty simple. It either gets bought out or it doesn't. The 3.5 million fails are from November 18. I'll do the math on it. There, it's probably worth it. Give me a second. I'll count it out. All right, so what was the half day? The 25th, right? So the 25th would put the failures on, or the failures to the 18th would fall on the 6th. But with the half day, because there was no settlement, they would instead fall on the 9th. And then for failures that occurred on the 29th of November, which are the 6 million, those are after the half day. So those would be on Tuesday, Jan 17. Block volume on Upstart today. 300k volume via blocks. Buyback? Maybe. Possible. So those are the important days. Monday the 9th and Tuesday the 17th for those ETF failures. What happens to Rev if it doesn't get bought out? They go with the creditors plan, which blows up shareholder equity. What do you got, OG? Okay. Yeah, it's possible. It might be buybacks. Jimmy OPEX price realization. If I buy like a June 25C and just wait at this price, is it very safe and likely going to catch a big run anyway? I mean, safer because you have less theta decay. 25C's, how much delta right now for June? That's got to be like 0.3 or something, right? 0.4. I mean, you're a little exposed. You're paying a decent amount of intrinsic value up front, so you're exposed to downside movements on the stock. But obviously, if the stock moves up, that would recover quickly, right? What could possibly be said during the minutes to impact the market if we already know what's in it? Probably not a lot, but that doesn't mean there won't be some volatility around any, asides regarding continued rate increases, right? There's, there's things said in the minutes that weren't, disclosed in the initial economic report. So, there could be something, that the market views as hawkish or dovish. I'm selling into the purchase, probably, yeah. Or there's there's also a possibility for internalization there, right? Looks like the last one was 1,000 contracts sold straddle 15 Jan 20th on Upstart. That's long vol position, so that's good. Sold straddle? Are you sure it's sold? It might be. Who's selling the SPX options? Market makers? For the, I mean, the majority of them are going to be market makers. Given the low prices now in Upstart and GME, do you see upside? The upside is limited, or is this extra down just pulling back further on the bowstring? And when it goes, it'll go just as high. It'll go 10 to 15% above wherever Gamma Max ends up, probably. $90. There's also block orders, which is what we were looking at, not just options, but there was some big block orders on Upstart as well. You critique the strat. Run occurs, Ivy gets juiced, dump deep out of the money calls to capture money, spike due to IV rise, and pick up weekly deep in the money calls. $1 strikes. Basically swap extrinsic for intrinsic. Then use the $1 calls to take delivery of the underlying. Sell CCs were appropriate on newly delivered shares. Yeah, you could do that. In order, I mean, what you're trying to do there, I don't know if you'll be able to time it manually. But what you're trying to do there is you're trying to capture the implied volatility and roll it into intrinsic value. You can do that. Um, I don't know how effective it'll be, or if you'll have necessarily a seller for $1 calls on a run like that, but you might. I'd imagine that the market maker is going to price in a premium on those if you're, yeah, like you're not going to beat their arbitrage, right? Carl has the chart pin in the public Upstart Discord server. I know. I know what the chart looks like. So internalization into share buyback. Well, we don't know if it's a share buyback, but we know it's a block order. Equals more reg show. It could mean more reg show. They're managing to keep it off reg share for now, or at least into our last FTD report, they were succeeding at keeping it below 0.05% of the shares outstanding. What's your NVIDIA PT for March 17 again? If I have 150p, bought when it was 169, 75% profitable. Do I pray for profit? Do I take profit now or wait? Hold on. I gotta read the rest of this. Jesus Christ. A bit worried it might run back up. It feels unlikely to see above 165 again. I mean, there's an opportunity to reposition if the market bounces, and the market's bouncing. I discussed this yesterday before the market bounced. But yeah, I mean, there's nothing wrong with taking profit and repositioning. Remember, if you're targeting a price by a date, right? You want to buy options beyond that date. So, you know, if you're targeting 100 by March, you probably don't want to buy March calls to capture that move, right? You'd want further dated ones. But March calls are very good at capturing the current drop. as you know, because you're up 75%. Gert, I love this channel, but I hate how long it takes to get back on board after being away for a while. We need a whiteboard or something. You'll catch up quick. What do you want to know, Cody? Are Gen 24 125C decent IV play for GME? 125s. Vega's what, like 0.3 on those? I have to look at the Vega. Gen 24. 125. 0.003. Yeah, not quite 0.004. And Vega's not great on them. It's okay. I guess the benefit is the bid's tighter. For relatively little additional premium, you can have almost 10 times the Vega at the $100 strike. So you should probably try to figure out your cost per point of Vega based on the premium you're paying. Thanks. Logic was to take advantage of purchasing the underlying in the most advantageous way possible. Falsely assumed a deep in the money $1 weekly premium would be de minimis during a run. Oh yeah, probably not. I mean, you're probably gonna pay near spot either way, right? Because it's 0.99 delta. How big of a port would I need to make a 8K a week with decent risk management? 8,000 a week with decent risk management. Sorry, probably you figure like a 2 to 3% yield a week. Should probably figure out. You need to make 8K a week. Hold on, I'm trying to figure out what would be like a good yield for right now. $400,000. I'd say 400 to 500,000. The 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 tighter your risk management, the more money you're gonna need. Like really, really risk averse, you're gonna hurt your yields, right? So you need closer to 800K. Also, that's a lot of fucking management for that much money. You might as well target like monthly yields at that point, right? Updated DMs on those blocks, all options related. Man, I can't tell you how much I don't give a flying fuck about intraday options flow. But you just love DMing me about it. Oh, okay, so the block orders were in the market maker in relation to the options trades. It's just meaningless though, because you don't know where positioning is. And bid ask is not a good determining factor, right? Like especially on blocks that big, it means nothing. Like proximity to the bidder ask is almost irrelevant at that point. When you use protected puts, you typically go for delta hedging, so you're typically 100% covered share per delta, or do you go slightly out of the money? For protective puts, I go in the money, but I don't go that deep in the money. Like 0.6, 0.7 delta. I'm not 100% delta hedged on those, but when you combine that with the covered calls, I am. I'm more than 100% delta hedged. Because I'm probably selling like a 0.6 delta call, and I'm buying a 0.6 delta put, right? So I have like roughly 120 or 1.2 delta per 100 shares. Why is Vega on IBKR for Jimmy Gen 24, 125, 127.50 is higher? They all use their own calculation, or or it's from a different data source. For those of us low on hopium, will Jimmy's illiquidity return with a run? Generally speaking, yes. They're good at killing all hope business. If ETFs do buy a bunch, would they start with deep in the money calls? Maybe. Sometimes we see a big spike in deep in the money calls. But that may be more of effective hedging or attempting to offset future FTDs. Safe harbor laws mean that they don't have to announce anything about a share buyback until earnings. So they don't have to say shit, even if it's completed. They don't have to say anything until their next earnings report. So the next 10Q. Last one, crime in your DMs. Oh, fuck. Did you see that Fintel's reporting institutional ownership of GME at 84.2 million shares? Last reported number was 33 million. Thoughts? It's due to an increase in put and call positions, not an increase in actual ownership. I don't know why Fintel's counting it that way, but they are. If you look at the most recently filed increased share acquisitions, the change is not comparable. So it's due to an increase in put and call positions. I know they don't have to, but if they want to, how quickly could they announce it? The next day? Yeah, I mean they could announce it whenever the fuck they want. Yeah, increasing call and put OI is a good sign. I mean, they're cheap, right? Calls are cheap. Did you go over the economic data today? Yeah, I mean there wasn't a ton, but manufacturing jobs are up. Jolts was down over the previous, but significantly ahead of analysts' expectations. So, Joe, like the job openings aren't cooling nearly as much as analysts expected them to, which I think analysts were overly bearish on that data point. That was I don't think there was any chance of that coming in that low. I really don't think we're going to see a pullback in job openings probably until deeper into Q1 and more so in Q2, Q3. I think the labor market's going to be hard to stifle at this point. There's a lot of other extrinsic factors that are acting on it that simply aren't controlled by monetary policy. So corporations are going to need to be hurting quite a bit before I think we see any real contraction in the labor markets. Is volatility and sway a little surprising to you for Fed minutes day? I feel like it's usually flat going into them. Not necessarily. Also, Fed minutes isn't. It's not like a Fed rate decision, right? It's not nearly as volatile of an event. All you need to do is get hit by a police car in a crosswalk, and I can make 10K a week. Catch me in the streets. When I finally dump my Bobby bags, I'm gonna short it to the dirt. Nice. What is Delta? Wait, do you not know? Turd? Delta's the like estimate of how much an option's value changes in a $1 move up or down in the underlying security. I would and you're fucking with me, right? He's got to be fucking with me. It's also an airline. I know he's fucking with me. It's right. I hope. Turd, have you sustained any head trauma today? It's not happening on a dead news day like the last couple. Hate to be overly bearish, mostly in support of the early Fed reversal narrative slash lie The cash buffers are huge. It's not having a dead news day like the last couple. He's got big delta energy. Nothing's better than when Turd goes silent after stirring you up. He's listening, but he's also listening to Spotify and pretending to do his job. Tesla about to rip because of filing paperwork to make electric motors for planes, trains, and automobiles. Well, Bloomberg said something earlier. Or just because everyone's closing their puts. Once I bail on my terrible investment, I'm gonna short at an all-time low. Some retail guy probably. Are you gonna show the Fed meeting? I mean, it's just the minutes. There's no meeting. They're just releasing the minutes from the rate decision last month. I feel personally attacked. Why don't I have a membership anymore? It was probably gifted to you and it expired. Or your credit card expired. I really don't know. How do I get more gifted memberships? Asking for a friend. What's the advantage there? You can talk more and chat? Like, I don't even... Like, I understand getting Dillionaire. The other ones, I'm not so sure about. Unless they're received as gifts. Like, I don't think there's very many Cornichons that aren't just where it's gifted. Although I do really need to go back to the members only Sunday streams. It always feels dirty when the pores are watching us. I don't even have a credit card. Where am I? What's Delta? Oh, Jesus. It just seems so intuitively perverse. It just seems intuitively so perverse that it's a bad thing for the economy, i.e., pressure on inflation, that too many people are working for income and buying things, live. It's not that. It's that people are working more to offset the cost of inflation. But they're making more than the rate of inflation, and demand is higher for goods. And so that raises the price of goods because the supply of goods is lower due to the supply chain issues that we had over the last 2 years, which are mostly resolved, but there's still some left to resolve. So it actually makes perfect sense, I think. So the American consumer, once again, proving itself indomitable, right? People are, instead of cutting back and budgeting, people are just working more and buying even more shit. Doesn't gifted Cornichon make it cheaper to get higher ranks? I don't know. I think it does. Where do you look up official float numbers if you suspect a reporting error? You can look them up in the 10Qs. Official float numbers will always be available in the quarterly reports from the company. Generally, if there's discrepancies, it's like the reporting agency. So it'll be like Morningstar has, an incorrect value. So you can check multiple multiple data sets and find an average, or you can just check the 10Q. The 10Q will have the accurate number though. I've been holding back my most exclusive questions because the pores are watching. Looking forward to asking you more exclusive questions again. Oh Jesus fucking Christ. I'm never gonna close the pores out of the Sunday stream now. I still can't see Pickles Picks anywhere in the Discord. Are you a Dillionaire? You can only see them if you're a Dillionaire or a Pigeon Oil. Ban the pores. All hail DJ and Dillionaire clan. Thanks, Mike. I will say that the public chats are fucking hot garbage sometimes. Is Vengeance of the Poor working and purchasing out of spite? Kind of. But ultimately inflation is long term is worse for those with less money. So they're cutting off their nose to spite their face. Brett, thank you so much for giving Esrol a new membership. He was waiting on one, so he'll be very excited. Appreciate it, man. Esrol, welcome back to Cornichon, dude. Social media culture has lowered people's NPCs. Actual volume picking up on Upstart. Yeah, no, I see that. At what price do we get a song for Upstart? 1707. Actually, 1725. Ryan doesn't give guidance because he has none. Yeah. What are they going to say? We're sitting on our cash until macro conditions are better? I mean, that would be their guidance right now. They got their bond rating pulled yesterday, apparently, again. So they may be getting re-rated. I don't think they'll get an upgrade, but it'd be cool if they did. I only found out from the stream today about buying live option prices on IBKR. I can't wait to lose more money in real time now. Thanks, man. How many of you guys are buying options without real-time options data? Or, like, at least real-time options prices? Don't do that shit. That's really, really bad. I thought that would be a given. Thank you again, Brett. This time, hooking up Grant Jackson. Welcome, Grant Jackson. Do you think they'll short the heck out of SPX after FOMC minutes? Because that's what they do. Did you buy puts? Are you asking me if your puts are going to print? It doesn't look good for you, man. What happens at 1725? We move above gamma neutral. So if a really rich person holds stock in travel and travel stocks are not doing well, they can buy all their employees flights and Disney passes for a week and then write it off. Yeah. Are you saying that Citadel sent their employees to Disney World to pump their stocks? Because the effect of that would be extremely negligible. So Upstart plus 8% on 1.9 million fails. 5.9 gonna be spicy. It's 5.3. It's not 5.9. It's 5.3. But during SLD, so it might not be as explosive as we hope. Maybe not. I mean, yeah, that's a possibility. Check Discord DMs. It looks like the reporting issue is due to the split. Okay. Last quarter reported 815 was 630. This quarter reported 11 at 15 is from 930 ownership, which would be after the split. That's still 80 million shares, which is well above the 30 million. Okay, so it's just an error with accounting for the split. Good to know. That makes sense. That would also imply that shares were sold. Like 10 million shares were sold. If that's the case. If it was 30 million pre-split, 80 million post-split, there's a 10 million share discrepancy there. Or a 40 million share discrepancy on the other side, however you want to look at it. We know leading into the December 12th ETF rebalance, 2.27 million shares of GME were sold. So that probably is some of it. Although that wouldn't be reported yet. What's up with Upstart FTDs? There's a bunch of them apparently. So if a really rich person holds stock, travel. Okay, answer that. Isn't that usually a run up until FOMC minutes, then a rational market action in either direction? Yeah, we could see that. Although there's not a very significant amount of put delta right now. So um, I'll update again. I think Gamma's mostly positive around our current price. So a little flat below is that 38.50. So it looks like the straddle point is like 38.60, and then the strangle is like 38.25, 38.75. So, there is some positioning. It's not as heavy as we would see for like a rate decision, but there is some positioning that would, like that. So, straddle, strangle. That's not how that works, Carl. YouTube won't let me do payments anymore after that webcam debacle in Belarus. What? You know, you can just make a new Gmail account, right? What scenarios would you roll your upside 14s to 15s to increase your leverage and exposure to intrinsic and extrinsic value, although more risky than staying in the 14s? Educate, please, senpai. These are fucking weeklies, man. I'll just sell these. What would you realize short-term profits on upstart leaps with this price improvement? I probably wouldn't. I don't think it's the price has improved all that much. It's only up $1. Institutional ownership is really 80 million, then that's a huge decrease in liquidity for GME. It's not. That would increase liquidity, right? Because institutions would buy shares and then lend them out. But GME, what he was saying. Where the fuck is my pen? Oh, what he was saying is that Fintel is miscounting the split transition. But this should have split to 120 million shares, which indicates that, we're currently at 80 million, which would mean that 40 million shares on this side of the split are gone. Which does not indicate institutional buying, but the opposite, right? Still can't get people to multiply by 4 or divide by 4. It's not that hard. It's 4. So primes are the banks, lenders, but what are APs, authorized participants? Can you go over this in some detail? APs facilitate all of the creation and redemption that occurs within an ETF, for which they are an authorized participant. They are not directly the lender of shares, but they can be the creator of shares. So they have similar liquidity provisions to a market maker or a DMM. There's several different types of authorized participants. Some funds have, some ETFs have more, some have fewer. Sometimes the NAV of a fund is managed by the authorized participants. Sometimes it's not. Do you think it? I might be right. Straddle's put into place prior to covering to profit on subsequent volatility. Yeah, you're not wrong. Most of that volatility is priced in though, so I'm not a huge fan of buying like zero DTE straddles, and it doesn't look like informed investors are either, as they are mostly long right now, at least on the zero DTE. On the further dated expiry, yeah, gamma's a lot flatter. So the straddles and strangles they're buying are further dated, not at the zero DTE expiration. Is Upstart going to 1,000,000 billion? I hope so. IV's definitely moving up a bit. The pricing and risk, Stefan. Lots and lots and lots of risk being priced into Baba. Turns out you can't legally transfer BY into USD, and YouTube Live got really salty about completely legit companionship business I was running. Oh, I see. You excited to be the DFU of Upstart? Sentiment is such a funny thing in the chat. I know. It's a privilege granted to, whoever works with authorized participants. Each ETF has authorized participants that they approve internally. Generally, most of those authorized participants are market makers. Thanks to you and my new internet best friend from your Discord, I'm in a better position earlier and smarter. Thanks, you intelligent, lovable sons of bitches. Thanks, Contra Cusub Kepi. What's happening with Upstart right now? I mean, it looks like some covering. We've been shorted so much, I don't know what to do seeing all this green. Yeah. At what price will Upstart would bring you more gains than GME? Oh, I have no idea. I have to do the math on it. If Upstart goes above 35, I'll make quite a lot of money. After all that's happened, have you finally, or at least tangoed with the idea that there is a measure of collusion on the ETF or AP side? A deferment on top of a deferment on top of a deferment? Actually, I don't think so. I think it's actually the opposite. I think the deferment schedule and the positioning by market participants and expectation of a covering that didn't occur um, implies that they are not aligned with each other or acting in sort of here profit. What was I talking about? Hmm. Is this to avoid reg show? No, this should be clearing FTDs that they used to get out of reg show in the first place. Concert. Acting in concert. What was that about? Oh, the authorized participants. That's right. Sorry, I got distracted. I just had a boatload of SPX calls get stopped out. Yeah, so oh, my Upstart calls got stopped out too. Sad face. Ah, they were weekly, so who gives a shit. Upstart seems like the definition of when you described buying protective puts earlier. The buying protective puts on Upstart at 14.50? I mean, I guess you could. It doesn't seem particularly worth it given how little downside there is from this price point. Correct to say ETFs allowed to provide a locate for a stock without actually having the stock, assuming they do have the stock within X days. Yes. Absolutely. Safe to say ETFs can provide a locate for a stock without ever reporting the initial transaction to the NSCC, actually, if you really want to get into it. ETFs are capable of creating infinite liquidity. That liquidity has to be resolved at some point, but the creation of it is only limited by the amount of money available to create those shares. Getting into volume analysis at the moment, do you think fixed range volume profile is good tool for that? It's not bad, yeah. Especially if you're drawing long-term trend lines to determine where to cross through a run. Yeah, it's good for measuring, oh, Fed minutes are out. Measuring sentiment at various price ranges on a stock. It's also good for finding resistances because if you know where most people own their shares, you know where most people are willing to sell them after a long period of trading under that price, right? That was weird. My SPX calls spiked into the like their limit sell right before the minutes started. I mean, I'm okay with it, but infinite liquidity is where the phrase "spies the limit" comes from. I mean, most ETFs aren't willing to provide truly infinite liquidity, right? Some are obviously more complicit than others. Like the spies only sold 50% short at any given moment, roughly. Whereas, XRT sold like 900% short. Wait, so shares don't expire? No. I'm still at Upstart, boys. Nice, man. So the lower range of that strangles at around 38.25, 38.30. If there's going to be profit taking here, it can probably drop a little bit more. That's a weird effect of pricing up the calls. I'm still weirded out by that. My calls filled kind of high. RevRQ shares might expire. Well, they'd be destroyed. Does GME shares ever actually leave XRT during the creation redemption abuse cycle? Well, yeah, they create them and then they sell them. Which is effectively shorting the stock, but it's also not. No, there's still more room for it to go down. Be careful. I wouldn't target a bounce here just yet. It's volatile, so it's harder to track, but there's definitely a little bit more room to the downside still. If you're already in a straddle, however, I wouldn't be so quick to cut my calls. But if you're not, and this could be a risky time to buy them. What are the minutes? The FOMC site is terrible. I mean, they're not going to say anything they didn't say back in December. No, I don't think it was bad. It's just some volatility surrounding it. Oh god, I'll find him. Give me a second. Uh, blah 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 blah. All right. Developments of financial markets. Here, I'll just share the link. I don't want to fucking read this. Sure. Staff economic. Less than growth remains. So. For the November supply demand. It's tight. Market layer. Market is inflation. So we just housing source down. Or non housing source. Inflation still over. Inflation. Side source. Side growth in real private domestic. Consistently tight. Seen. I'm not seeing here. I'm not seeing anything here. It's really significant. This looks very much like what they spoke about in December. Undertake market operations necessary to maintain funds rate in the target range of 4.25 to 4.5%. Conduct overnight repurchase agreement operations and minimum bid rate of 4.5% with an aggregate operation of 500 bid. Conduct overnight first repurchase agreement operations and offering of 4.3 with a per counterparty limit of 160 billion. Okay. Rollover at auction the amount of principal payments to the Federal Reserve's holding of Treasury securities each calendar month that exceeds a cap of 60 billion per month. Redeem Treasury coupon securities, so a little bit more tightening. But they haven't been quick to move forward with that anyway. Reinvest in the agency secured. Again, no longer shedding MBS. All modest deviations from stated amounts for reinvestments if needed. Reason. Engage in dollar roll and coupon swap transactions as necessary to facilitate settlement of the Federal Reserve. That's transactions. Okay, so nothing too significant. The only thing I'm really seeing here that wasn't discussed in the December announcement is intent to now move forward with reinvesting in MBS. It's a good time. I think MBS are down, so but they're capped 35 billion per month. So Reconfirms higher rates. Minutes are bearish. And minutes are the same. They already confirmed the rate intention for end of 2023. My mic isn't glitching. I was just trying to read through all of that real quick. Volume on SPY suggests this is stop loss hunting. No. Yeah, I think just like a little repositioning of the straddles. I mean, if you're not already in a straddle, I would probably just wait for volatility to die down. If you're already in, this may be the extent of the range for the downside. It's tricky, but I'd at least have some stops, maybe above like the 38.53 level, to protect in case this gets volatile in the other direction real quick. It could. Right now, I would say we're still headed for 38.35, maybe 38.25, nearer the bottom of the short positioning. Like, that's where the momentum looks like it's going, but that can reverse quickly. So, stops on the short side are smart here. If the price doesn't break 38.40, is that bullish? Yeah, that's why I said stops in the slightly higher range are beneficial here, because if it does break up, it could break up very quickly. I think we're seeing long build up. It's hard to say, but I don't see a reaffirmation of the rate hike that they've already announced, given that the minutes are dated from last month, is significant as far as the bears are concerned. Everyone knows about the rate hike. The SPX is still pulling, is still pricing in a pullback by the Fed sometime this year. It's still the best to ever do it, man. The amount of time you spent repeating the same things and not losing your mind is admirable. Thanks, Mike Spickles. Staff the possibility of recession sometime over the next year is a plausible alternative to the baseline. They said that at the economic report in December. All of this was already said for the most part. The only things that weren't mentioned were the advance and repurchase agreement, like the overnight repo rate, and the shift to QT and the MBS, or QE and the MBS. I mean, it makes sense that the Fed wants to buy the dip on MBS, right? We think it was due to a skip settlement day in November, and it's just the FTDs due from yesterday. Mario. the like 1.9 million FTDs we're expecting yesterday. So the November 25th was a half day. So there's a candle for it, but it didn't have settlement. So it may have fucked up our count of the FTD due dates. The recession isn't going to happen soon or fast enough to make the Fed change course. Probably not. I think at this point it's beneficial for the Fed to push us into a recession. Not that we're not already kind of in one. Does selling a covered call lower your available margin? No. Yeah. I don't know if the trend's reversing here, but I mean, like I said, stops at the like 153 price um, are beneficial because if it bounces through that, it's probably going to move up. That would be confirming a breakout to the upside. So right about here, if it breaks up here, that would be where you would want stops on puts. When the Fed pivots, it means they broke something. It's not bullish, not until capitulation is over. I don't know if they'll necessarily push to the breaking point, but they're trying to. They want to push to the breaking point. I think that's the most beneficial outcome. People need to know this stuff. I don't think you're correct most of the time. I don't agree with your assessment. So you're saying people need to know this stuff, but not necessarily. Earlier you said 11th, 8, 3 million FTDs on Upstart are due Friday, 1/6. But could that be it is the following day. It's Monday, 1/9. I said that earlier. I said Monday the 9th, Tuesday the 17th. If Upstart is moving up from ETFs today, and we think it will again Monday, are they going to try to push back tomorrow and Friday? Probably. Especially if they freed up some liquidity. What's the other important economic data do we have this week? For this week, we still have more jobs data. There's more labor market coming data. On Friday, we have non-farm payrolls and the unemployment rate, both of which are important. Labor participation rate, and earnings, average hourly earnings for December. Tomorrow we have balance of trade, which it'll have an effect, but it's not that bad. We have initial jobless claims tomorrow. We return to Fed president speeches tomorrow with Bostic and Bullard both speaking during market hours. Well, Bostic right before market open, and then Bullard in the middle of the day. We have a final composite PMI from S&P for services, and then Friday we have ISM non-manufacturing PMI, which could be important. We also have Fed speeches from 11:15. We have Cook, Bostic, Barkin, and Bostic again. So your risk management is way too tight. I'm sorry, it's up 10% today. Just YOLO into one song. I think you're saying people need to know this stuff because 80% of us not knowing is why the economy works for the rich more than the average Joe. I mean, I agree with that too, but I think his assessment is, at least for the near term, overly bearish. I think the Fed ideally would like to push into a scenario where we get a market crash. I don't disagree with that, but I don't think it's going to happen right now. And I definitely don't think FOMC minutes presenting the same exact fucking data that was presented 1 month ago are going to have a significant effect on current market pricing. As you can see, they've basically had no effect over the 30-minute period. So it was more addressing that claim. So I just joined Happy Wednesday. Is Upstart just going up proportionally with the market or anything significant happening? Cheers, bud. Upstart likely has a bunch of FTDs due today. I have to look up if half days defer FTD settlement. I'm not sure if they do. There is no settlement on that day, but that doesn't mean that settlement due that day it doesn't need to occur. So I have to double check and make sure, but it would appear that this is the realization of FTDs that were expected yesterday. Here's your problem, Superman, and it's something I see a lot of with a lot of people who want to define themselves as being bearish is that you have to consider both sides in the market. You have to be mentally flexible. Don't just assume that the given data is going to create the conditions that you want to see occur. Being bullish and being bearish are both equally stupid. Yes, be like water. And go long volatility because it's fun to watch the world burn. It's really actually very important that you don't develop a mindset where you're locked into one direction in the market. That will lose you more money than it will ever make you. I'm in calls. Okay. But when you get data like that, look at both sides of it, right? Objectively. I do. Everyone has bias. There's no way to prevent that, but I do my best to be objective with the data I have. Informed participants are not particularly bearish right now. They're also not particularly bullish. They're more neutral, and neutral data points aren't going to really affect a lot of change, right? Puts are overpriced, so there's a disadvantage to the downside. Um, but none of the data is particularly bullish, so there's not a lot of advantage to the upside, which has left us trading fairly flat, right? The next really big news is going to be, is inflation cooling more? Is inflation cooling more going to pressure the Fed? Now, while I don't think it will, I think the Fed will continue to advance rates. I think market participants are not always as equally hawkish, right? And there can still be a presumption from a large enough amount of participants that will pressure the Fed. Now, if you're gonna talk long term, yeah, go short as fuck. Whatever you like, you've got like if you're gonna go months and months out, then the trend is bearish. But if you're starting to target the near term, you have to deal with a lot more volatility, right? That's part of being a trader is you're not targeting, a 9-month time horizon. You want to know the effect immediately. And being overly bearish immediately is not beneficial. It's 5.25, not 5.4 terminal rate. And we don't know where in that rate range they're going to land, right? And futures are still pricing in, a pullback by a halt or a pullback by the Fed this year. I don't mind having. I'm not like mad at you or anything. I don't mind having the conversation. I appreciate the alternative viewpoint, even if I don't think it's valid. That's also just my opinion, right? Yeah, earnings are going to be a very, very important part of the next month. And yes, the current risk-free rate is damaging to equities, but that's also something that is long term, right? Calls stopped at the 38.40. This is a smart stop. I feel frustrated for the past 2 years. We've talked about bull milk constantly, but what about bear milk? I'm not going to try to fucking milk a bear. That's just stupid. Yes, going up though. Yes, pulling back also. There's still a short like this the positioning's not done just because the minutes are over. There is still a large and significant straddle positioning. And if just because we opened up the straddle positioning doesn't mean we've opened up the strangle positioning, right? Here, I'll remove that because both are possible. So the volatility here has probably gotten rid of much of the straddles, right? But the strangles are more flexible and they can hold out longer. And remember, none of these were being bought 0 DTE. So some of this position can even persist into tomorrow or the next day. What about a panda bear? They're endangered and need some artificial insemination. No, we just don't need pandas. They're useless. They don't get enough nutrition from the food they eat to survive, and they won't eat anything else. Sometimes evolution fails. That and the koala and the sunfish. Good entry on Revlon. Uh, if you're betting on the buyout, I guess it's risky as all hell. I'm sure people will though. I disagree. Pandas are cute, and I want to see more of them. Yeah, so extend their suffering for your own gain. I think a lot of people, there is lacking of trading skills to deal with near-term volatility, resulting in more losses than profits. So it might not be a bad idea to use the cash to buy long-term puts and just wait rather than lose them like a few percent a day. Sure, yeah. I agree that. I mean, targeting longer term trends is more accurate, right? That's on 39.50. For Friday. Awful. Way too far out of the money. But upstart position is 50. They can't survive on their own. Like if pandas were placed in the wild, they'd all die out. They don't get enough nutrition from their food source to feed their young. My upstart position is up 50% today, meaning my overall upstart position is only down 95%. Does this mean it's time to take profit? No? How the fuck are you down 95% on your upstart position? Domestication is the only long term play for any animal to survive. Get cute or get crowded out. That's the way it's going to be. Probably. Carvana shorts never closed. I mean, there hasn't been any significant capitulation now. Is Upstart dead? No, but they're probably done covering FTDs for now. Also, the market's dropping. Is every like 20 cent price move on Upstart gonna prompt this? Because I'll just stop watching it. Fucking Christ. I don't know. Let's see what happens when we get closer to the bottom of the strangle. Gork, candle, what mean, what do? I took profits on Upstart weeklies and rolled into Feb 20s. At the top? You rolled at the top? Why would you do that? We just got to discussing how if there's no ETF FTDs for the next couple of days, they'll probably try to drive the price down. Right? Sold at the top. Yeah, but you've re-entered at a very high price. I'm not saying you're necessarily wrong, but it's risky. A little risky. Also, there's some IV's a little elevated today. I don't know. I wouldn't have. I probably wouldn't have. I also took profits on my Upstart weeklies at the top, but I'm not going to roll that back in right now. $15 CCs on Upstart. Uh, I kind of want to sell them, but here's the deal. The only reason I don't want to sell them, well, at least at 15, is because I'm not 100% sure yet that the half day is going to defer the next round of FTDs. That's something I need to look into tonight because I'm not really sure how the half day affects settlement. Because beyond entering a compounding fails territory, it looks like it's leaving a compounding fails period. At least that's what the last FTD reports trend would indicate. It's also off reg show now, so um, some of that makes me a little wary of it in the near term. But they may have also experienced like some ETF FTDs today. I need to dig all that up. During ETF redemption, are shares of the underlying securities actually removed from the ETF? No. The ETF is an infinite liquidity pool. Yep. Well, it's not redemption. It's creation. Poofs new shares into existence. But the NAV is then balanced with the agreement to then buy those securities into the future, right? You use forward contracts to balance your NAV. So I'm negative 5 million shares of GME, but I have forward contracts covering that deficit, right? So I agree in the future to purchase 5 million shares of the underlying stock, and this is, balanced. And then our runs on GameStop largely driven by the covering, the closing of those forward agreements. The timing of the closing of those agreements, that is tricky, admittedly. But when they do, oh boy, no problem. Would you date a woman with a fairly pronounced beard? No. No, I probably wouldn't. Is it you, Claw Range? We could work something out. I've seen you before. How do you feel about waxing your face? Macy's on the daily look more like the top of a second shoulder of a Head and Shoulders, or about ready to take off. Macy's on the daily look more like the top of a second shoulder, or about ready to take off. I don't know. I haven't looked at Macy's chart in a little while. Generally, it runs with everything else, so it looks pretty good. Could be the second shoulder of a Head and Shoulders. No, no, it's right at resistance right now, so I guess look to see if there's a failure. I would say historically it looks like it has more room to run. Like potentially up to, the 23 to $24 level, but that's purely based on the current amount of momentum. And I don't know how much of today's price action was just due to FTDs, so it may fail back towards like the high $19 range, 1950 range before moving up again. That's called a dude. Not necessarily. Would you date a floating head with a cowboy hat? Only if its only means of locomotion was actually rolling while the hat stayed in place. That's what really does it for me. Okay, really though, if I go full bear and share bearish things all the time, the big guys who invert our meme plays will inverse me, so then we will run. I just We're not that important, man. Much appreciated. Maxi looks good, but the other side of it looks bearish. Thanks, man. No problem. Yeah, I'd be cautious in the near term, but Macy's historically runs with most of the other stocks we watch. Not as much. The volatility doesn't get as high there, so it's not as exciting, but it usually somewhat in tandem. SEX finding a bottom here. Is it too early to tell? I mean, we fell nearer to the lower end of the strangled position. Uh, I don't like that we created a gap to the downside here. It indicates that there could be a potential failure on the 38-35 resistance. I don't think we've seen profit taking or any significant profit taking from anything at the 38-35 or 38-40 level that skewed bearish. So I would say be patient. See how this fills out. If there is some short capitulation down at this level, probably from the 38-40 strike, um, then we may see a move back up above 38-35, which could drive further out of the money capitulation. I don't see a significant sell off in the long side anymore. I think the long side that was going to sell off sold off here on this test of like 38.60. So that was most of the drop in 0DTs, and there we go. So there's your 38.40 capitulation, and then you'll probably start to see some 38.35, 38.25 capitulation here, as well as it pulls back with some velocity. Can you explain the DFE tinfoil hat theory again for GME? We found a correlation between the cost to borrow, volatility, liquidity, and options positioning on GME when approaching FINRA 4210 F6 deferral periods. The correlation there aligns with our current lack of price action on GME, and also aligns with the January 2021 and March 2022 periods. DFE tweeted he retweeted his tweet from the December OPEC settlement in 2020 on January 13th, which is funny. I mean, that's really all you can draw from it because you don't know the underlying meaning, but maybe like December 22nd settlement was occurring on January 13th, which would have been the day that date was deferred to. The more compelling part of that is DFE is a FINRA member and an employee of Mass Mutual may have had access if provided ETFs in question were customers of Mass Mutual may have had access to the Rex code deferrals in the FINRA system and would have been able to see and time the settlement of those obligations. But more importantly, I think, is the confluence of the data sets going into this settlement period. Because that is something we can confirm. Obviously, we don't know what DFE knew or didn't know. But I think it's a better explanation than Time Traveler. Would you ever consider giving Gaff the nickname of Gaff the Math Garian? I actually love it. Don't forget that he held his calls all the way to the end. He did. He held calls that were expiring very near that date all the way into that settlement date, which is kind of an obscene amount of confidence unless you knew something was going to happen. And they were pretty fucking worthless approaching January 13th. But there's other reasons for that, right? Like you could have lost all the value in them already, not necessarily known it was going to run that day, and then it did. And there's no way to say, right? Like he's down 99% and he didn't sell doesn't mean anything, right? Yeah, and then they weren't. Well, you could have rolled those, Morpheus. But yes, similar, actually. He had the following expiration calls, which on January 13th of 2021 was... they expired on what, the 15th or the 16th? 15th? So he held Jan 15 calls into 2 days before expiration. I'm down 90% of my Jan calls because I forgot to cut. Am I the new DFV now? We'll find out, I guess. I mean, are you going to sell them for your 4% back? But he could have been facing that same dilemma, right? Without, that. So it's very circumstantial. SPY accumulation on the 1 hour. Some evidence, sure. I think the daily is more indicative of a potential turnaround, but I don't know how long it would last. I'd be cautious of the potential for earnings to reverse that trend. So in the scenario DFE thesis is right, there would be subsequent, well, if he even had that thesis, subsequent run for us soon. This is where the 12th to 18th estimation of a run comes from. The 12th to 18th would be the period to which the previous OPEXs would be deferred, if we are correct. There were November OPEX positions with expiry Jan 20. Held them for December OPEX, and after December open, they were already not worth much. That's fair. The time to cut those was T+2 in November, though. Just FYI, when playing OPEXs, you definitely don't want to hold contracts for an additional month. It's much better to close them, wait till the next month, and then reopen new ones. No, actually, him having personal knowledge of the codes would not be a violation of any regulations. If he'd shared the knowledge of that, then it could have been. But he was actually very careful to not break any of the guidelines about client privacy. I rolled what remaining value was left in my Jan 25s and Jan 30s. Today out to Jan 24 590s. So just playing the vol side. Okay. Are you buying Jan 17 on SPX? No. Not right now. Jan 17. Why would I buy Jan 17? Would Jan 12 be T+2 and so on? Or is the dating not so exact? Jan 12 would be the first day of deferral settlement for 4210 F6. We don't know what day is being deferred, and so we have to look at the entire 5-day window, which is It's not actually 5 trading days, it's 4 trading days, but well, I guess it's 5. It's the 12th, the 13th, 16th. Yeah, so it's 5 trading days. We have to look at the entire 5-day trading window. Zero Hedge says PiFi is a shill. Awesome. Gherk tinfoil, best tinfoil. That's because I back it with data. It's not really tinfoil. There's just a tinfoil aspect that's fun to consider. Could Martin Luther King Jr. Day defer this Jan OPEX? It could defer settlement due around Jan, like that Jan 16, but the deferrals from MLK do not extend to January OPEX. So no. 2023 should not have issues, the same issues with holidays that we had in 2022. Is SPX likely going to keep chopping in this range until CPI to break in either direction? I mean, we have some data before then. Unemployment numbers could come in maybe a little bit better. That could push us up. I do think we're kind of range bound between 3,800 and like 3,900 for the foreseeable future, but that's mostly just because there isn't a lot of positioning outside of that range. The end of the 5-day window ends right before the beginning of SLD. Yes, it does. If DFV didn't break any rules, why was Mass Mutual fined? Mass Mutual broke rules. They are responsible for their employees. I'll get a job that shows me the Rex codes. Do you think Citadel will hire me? Probably not. If volatility shorts want the biggest run possible to open a new position at the top, the 12th to 18th round would put more GME calls in the money. This puts big pressure on the MM going into T+2 OPEX GEX. Yeah, it does, but if the MM can get priced back to spot before the expiration, then there's no pressure, right? It's something to be wary of. Hey, Daddy, bet you can't guess the closing price for Upstart. If you're plus minus 10 cents, I'll re-dillionaire. I have no position in Upstart. Mm, let me think. $14.10. You don't have to become a billionaire, but I would say 14.10. With a margin of error of 10 cents. I want to say 1408, but I'm a little more bullish than that. How about our weekly expiration options? If I want February GME to cover me into the 3rd week of January for a possible run. Is it dumb to not strictly buy Feb monthlies? Yeah, unless I would say I wouldn't buy anything shorter than a monthly unless I'd already confirmed price improvement. So in the lead up period, I think it's fairly dumb to buy anything with less than 30 days of theta. Because if no run occurs, that option will be worthless by the time you're able to confirm that there isn't a run. Ideally, you would actually buy like 90 DTE, and then as long as you don't have a lot of intrinsic value in the position, there's almost no loss to premium. No, he said he owns no Upstart, not me. Jean-Claude Van Damme has no position in Upstart. I definitely have I have a position in Upstart on the screen right there. The fuck? Axe Capital. Congratulations, Bipolar Bear. You did it. Ideally, you'd full pour into out of the money next weeklies, several seconds before the run starts. Next 2 weeklies, the next bi-weekly. Dork, because you need to be able to carry the option through the full T+2 thing. All right, a little more capitulation here on the short side. This is looking good. We're also getting some long side buildup on SPX, so maybe we're looking at a return back towards 38.60. 38.50 I think will still struggle, and we're still net negative gamma, so be wary of rejections. They can drop quick. Dirk can't even degenerate. Such a quant. ACIW is a payment processor that Bipolar Bear has been buying for quite some time. It's doing some uppies. I hope you're able to recoup some of your losses there, man. Are you paying attention to their FTDs? I don't think there's any news. They had some news on the 14th. No, you're not. Oh, no news. If you had several Upstart Jan calls that are practically worthless, would it make sense to just hold them in case it runs by the 18th? Or better to sell and buy a few fab? I don't know. It depends on how far out of the money you are. I would say that, if you're below delta neutral on your strikes, they may have a chance with the 5 million FTDs coming on the 17th. But if you're above 20, I'd be cautious having such short dated calls. Sorry, Carl. Ideally, you'd go synthetic long with far dated in the money puts and use that to finance massive leverage on next weeklies at a net debit. Boom. $20 to 1 leverage. Let's fucking go. Assuming the DFV parallel is just tinfoil. I mean, the DFV parallel has nothing to do with DFV. It has to do with the data. So it's not tinfoil at all. That's the correlation is in the data set. I don't give a shit what DFV tweeted, frankly. I thought it was just funny at the time. But if there is no realization of settlement during the deferral period, SLD could take GME back down to the $16, maybe $15 range. If you're attempting to avoid assignment, I would probably target below our current low.
If you really want to avoid assignment, you would target below Vega neutral. That would have the lowest chance of assignment. So the higher you get above Vega neutral, the more risk you're taking. Upstart 123, 100 Cs, IV ticked up. Okay. IV on Upstart went up a bit today, so. Why is Dork not trusted with wrench powers? I don't know, I assumed he didn't want to do it. I think I asked him at one point. You can get the data from CBOE for free at the end of day. Chinese spaghetti-o. You'll still have to calculate it all on your own, but there is a free data source, at least an end of day data source. This happened within the last 10 minutes. That's interesting. I mean, IV moved up a little, but not a ton. I have Jan 24 510s here. Those might be a little less sensitive than 123 100s. Well, no, actually they shouldn't be. They should be more sensitive. I have a lot of leverage on them too, so I wouldn't. Yeah, I don't think it's moved up a lot. It might just be that strike. Maybe there's activity on the strike, and that's driving the volatility of the price of the strike up. I feel like it's one of the days where the SPY runs cuckoo at the end of the day. Well, the short capitulation's fairly consistent right now. I don't know how much more momentum there is on this run. It looks pretty good. I would say it's picking up some steam. I wouldn't mind buying like a 30. Six. Twat Waffles, thank you so much for hooking up Hemskara with a membership. Appreciate it, man. Yeah, that's fair, man. I mean, really what you need with 60s is a improvement in implied volatility. I can't imagine the premium on them is very high, though, so their potential is probably pretty limited at this point. So that's showing 79.9 million shares of Jimmy. They're unaccounted for. Based on the updated institutional ownership, I'm showing 46.3 million unaccounted for. That's a lot less liquidity for MMs and short hedge funds. No, it's not. They have infinite liquidity. We've already established this. And that just aligns with what I said, which is you're seeing a sale of 40 million shares from institutions in the last reporting period. Magnanimous, give Chicken Tender Daddy a shout out and welcome to Corner Sean, man. Thanks, CTD. There is no limiting liquidity. when I say liquidity is low, what I'm really saying, and more in depth way to describe it would be that the effect of continued creation of liquidity has become minimized. So, the more liquidity, they need to create more liquidity to continue shorting to have a realized effect on the price than they had to previously. So there comes a point at which the shorting is no longer the liquidity creation, and the shorting with that liquidity is no longer effective because synthetic liquidity is dilutional, right? And the more you dilute, the more you need to short in order to affect a change in the underlying price. But it's not that they're out of liquidity. It's just that any liquidity creation beyond that point uh, is not profitable. I'm not saying the numbers are a lie. I'm saying that the numbers are showing a sale of 40 million shares of GME by institutions, which makes sense with ETF rebalancing, actually, because the price is lower. The split occurred in June. We were trading at a significantly higher price than we're trading at now. The reduction in weight of GME and the 100 and so ETFs that it's contained in could account for a very large portion of those sales. The less the stock is worth, the less heavily it's weighted, the fewer shares they have. That dries up liquidity in a sense. Okay, if they sold 10 million shares before the split or 40 million after, it doesn't matter. The net effect is the same. Greetings, Pickle. I'm trying to download CBOE end of day summary from their site. Costs like $3, but you said it should be free. What am I doing wrong? I'm not sure. I think you need to create, like, there should be like a way to create a free account. You shouldn't have to pay for it. Maybe you're downloading like a different report, but yeah, there should be just a free version. I'm not all wise and knowing. I'm just telling you what the numbers mean. And it still shows the opposite of what's being inferred by. I mean, that's the real core of the argument, right? Is the data shows the opposite of what's being inferred by Superstock. Assuming you're right about what happened on Jamie with the end of year deferrals, and I think you are there any unanswered questions left, or would this cover it all? I mean, I think this would cover the missing gaps in understanding when and when and how we get OPEXs versus NOPEXs. I think it would also cover um, positionally the chain of capital from the authorized participant to the ETF. It would help us narrow down the available extension periods, or we can at least narrow down how far into the future they can write forward contracts. Some things that we still wouldn't have solved is how, well, specifically what part of the S&P audit is dodged by the reg show inclusion of XRT at given deferral periods, and how to track XRT FTDs accurately during reg show inclusion. But those would still be a bit of a mystery. Although we're a little closer to figuring out the XRT FTD thing, and XRT Reg Show. FTD's on XRT during Reg Show, like October 31st. But as far as timing OPEXs, and the resolution of liquidity, I think this would be a huge step. I think it would solve, if I'm correct, the issues with timing OPEXs. Now, there is one issue that it doesn't solve with OPEXs, and that's that they can cover in advance. They can submit those cash settlements to the ETF, and the ETF will immediately cover, right? So if the MM has risk, or the short volatility players have risk and they cover early, that will trigger an ETF buy-in. And that's something we saw November 3rd, 2021, something we also saw occur on August 16th of this year. So that still presents a significant amount of risk for playing OPEXs, right? Not if you're positioning at the low point. Like if you've identified a low and you're buying lots of theta, you're very much covered through any kind of event like that. But if you're trying to time it in a tighter window, that still presents risk, and that they can close the position early. But that also depends on how entrenched the position is at the point they begin closing it, right? Going into May OPEX and then carrying through the split period, we know that they closed out the majority of their volatility short position, but that took 3 months to complete in full, and still carried over FTDs on the ETF side into the August period, right? And so, you know, depending on how entrenched they are in the short vol position at any given time, you know, getting out of that position can take quite a lot of effort. Well, F-man makes sense because the rebalancing is MJSD. So it makes sense that the ETFs would want to, you know, they would want to hit neutral nav 30 days in advance of their rebalance, right? So it makes sense that if the ETF were writing forward contracts, they would be writing them in the offset cycle from their rebalance, which would be F-man versus MJSD. But that's, you know, more one for the accountants than me. How applicable is that information to other stocks? We're finding out. I mean, that the application of that information to other assets is a lot of what Upstart and Fubo are. My views on Fubo changed this weekend a bit. I'm still bullish, but man, was it a brutal app this weekend? Can you be more specific, Jeff? Yeah, this terrible thing whenever you start talking about deferrals, I get curious, I get distracted, and I get lost. Well, you know, the deferrals are something like a lot of billionaires know this. I don't know how many people outside of billionaires chat know this, but it's something I've talked with, like Dunstan and Effin like about for ages, right? Um, 6 7 months now, more. Really, really since December of 2021 is when it first started coming up in conversation. But the problem was is we knew there were deferrals. We knew that's in some way they were being used, but there's multiple sets of deferrals. They can happen over a significant range of time. Like we didn't really have any other data correlations or confluences in order to back up any known deferral process, and so there was not a lot we could do with the information. And it wasn't until we started to get more data recently and better analysis of the options chain, better analysis of GME liquidity, better analysis of GME's liquidity in secondary markets that we're able to find correlations between covering and extension periods. And that's what I found the other night when I wrote that post after fucking 48 hours of staring at charts. But it does correlate, and it's not easy to find, right? It's very obfuscated. And then it's also hard to make sure, you have to make sure that you're not seeing patterns that don't really exist, right? And so you need that confluence in the data sets. You need them all pointing in the same way, because otherwise you're just confirming your own bias. Concept buffering, downtime, etc. Okay. I have to say though, I do like the DVR feature much better than other apps that have similar. Interesting. I've never heard any complaints about downtime. I do know that they had some server security issues around the time of the World Cup, but I thought those were mostly resolved. Was there an issue with like AWS or something like, or whoever they fucking use? They use Azure or AWS or something like that in your area, maybe? Like a deferral that can cause another deferral dates to extend. That's the thesis, McConnerberry, is that multiple stacking deferrals uh cause larger than normal runs. I think with confirmation of that, we may actually be able to say that um all OPEXs are significant and that simply some are deferred, but that's something I'll have to dig into more. There'll be another deferral this month with MLK on the 16th. So the deferral that occurs on the 16th will occur for any trades settling between the 16th and the 20th. It does not affect OPEX, or 16th and 19th, 15th and 19th. Let me double check it, but it doesn't affect the OPEX settlement period. And it doesn't affect any previous settlement that's due during that period. It only affects new settlement that would be due during that period. I believe the holiday covers January 10th, 11th, 12th, and 13th. So it only covers new settlement that would be due during that time. And since none of the settlement that we care about is due during that time, I don't think we're very concerned with it. It will not further extend settlement that has already been deferred. Azure? How's What's the word? Is there another way to pronounce it? Azure? Ew. SPX Gex update, still fairly flat around 3850. Maybe a little improvement in momentum here. We might be looking at like a small breakout potential. I don't think it's going to be a lot of momentum, and it could just be consolidation. Futures seem to have fallen back against the upper range of 3868. It is acting as a support now, though, which is moderately bullish. I know Dr. Gingerbread has run plenty of DD on the Greeks. Now that I think of it, there's probably DD on Gamma Flip Points, right? No. I'll search when I have some time later. I'm pretty sure he hasn't written anything about those. But it's just, I mean, just gamma neutral. That's the point on the options chain at which the market maker is neutral gamma. So there's really, it's not a very complicated thing. You're brilliant. Thanks for lifting the veil just a bit and offering the rest of us a glimpse of the complex market mechanics we're all subjected to. I do my best. Thank you. Using Market Chameleon for what? No, that fucking site is a waste of money. I still pay for it because of their time and sales data, but Jesus fucking Christ, I hate paying for it every month. Yeah, always for the previous day. I'm not standing right now because if I stand, my green screen is only 72 inches tall, which isn't tall enough. So maybe I have to like put a platform on it. My head goes over the top of the green screen. It's not great. I'll have to figure out a solution for that. I don't know what to do. Well, no, the green screen is 72 inches tall from the floor to its max height. I'm 75 inches tall, so I go 3 inches above the green screen, which looks really weird because then I have a green screen like right through the top of my head. Can anybody here do 72 inches is 6 feet? Oh, Jesus fucking Christ. Moving on. Get a standing desk for the screen. Yeah, I'm still bullish on Upstart. I can, but the desk raises and lowers. See, it's kind of cool. just raise the desk out of view. Thoughts on Shopify? I kind of like it. I have some positioning on it. I made some good money on the last bump on it, and I had to roll forward some contracts where I got a little too over exuberant, but I have some calls for March. Maybe consider buying a Gideon pole to your back, like feudal samurai in full battle armor, then put the green screen on the pole. This way when you stand, the green screen stands too. I'm not doing that. That's fucking ridiculous. Do you have the Greeks for Snap by any chance? Yeah, I think I do. You thinking what I'm thinking? I agree. I'm starting up today with some FTDs. I'm sure they'll short it back down, given the chance. Unless the market continues up into next week, in which case it'll be difficult for them to short it down. Remember, that's why our correlation to the thing I was talking about earlier, how liquidity is not really a measure of how much available liquidity is, but the effectiveness of liquidity. That's why as we move deeper and deeper into the short volatility cycle, and near our bottom, our beta picks up and we become more exposed to index movements because their ability to internalize and offset price action with liquidity becomes less effective, right? And so it becomes harder to short into a rising market or harder to maintain price into a rising market, and they're forced to allow it to move with the market more. And then as they start positioning long volatility, you start to, you know, if the positioning is very large, and it's something we've seen in the past, we'll start to not only replicate, you know, our beta will go above one, right? Our beta, then we start to act as almost like a multiplier on market moves, and we would begin to outperform market movements. Who gifted me? I think it was Twat Waffle. Magnanimous. Thoughts on Nvidia? I bought some calls to get delta neutral on my puts, so we're up 50%. I'm now up 10% on the calls too. Why would you go delta neutral? Why wouldn't you just? Okay. Sure. That's a way to. I guess that's a way to handle the upside. But unless your puts are in the money, they're going to be decaying. So generally, you would reduce exposure to puts, increase exposure to calls, and then roll that money back into puts as you closed your calls out. So you'd want to go positive delta into the upside move, and then increase your short side exposure after the top of the move. You wouldn't want to carry out of the money exposure into a reversal in trend. My Beyond position is now bankrupted me. Okay. Why did you buy Beyond? Waffle did Hamskara? Oh, was it you, Brett? I thought it was twat waffle for a second. I guess it was. Oh, it was chicken tender daddy. Everybody gifted like one membership, so I don't know who. I don't know who gifted what. It was like twat waffle. It was that guy that said if Jamie goes to 100, I'll only make 14,000, and it was you, Brett, and CTD. So it's one of those 5. Because you said it was interesting, and that was enough for me. Interesting doesn't mean it's gonna go up. Interesting could mean it's gonna go down really hard. Can we expect some T+2 from some of that decent-sized internalization on Upstart today? I don't know how decent the internalization was on Upstart today, but sure. I mean, maybe not. I don't know. The 14s didn't go stay in the money. Looks like we're falling back into VWAP towards close. So I think it'll depend on if the market rallies here. If the market rallies here and the 14s go back in the money, maybe a little, but not a lot. I mean, there's not a ton of options interest at $14. I don't think, not enough to play anything on. Gridlock debt ceiling of the house. What mean? It's the same shit they do every year. JPM calling for a treasury sell-off. Interesting. We'll agree to disagree. Every time you do this, I just buy more docu. Would you be buying near the money leaps on Upstart? Or would it be better to just buy 30 and above leaps to have exposure for a potential run? You could get both. I mean, they serve different purposes. One of them, you're getting a lot of leverage on extrinsic value. One of them, you're getting less leverage, but you're more exposed to intrinsic value. You gonna short snap? No. Oh, descending wedge. When will you end? At the heat death of the universe. It just eventually just starts trading 0 volume per candle, but it continually moves downward. Like no volumes traded, but the bid pulls. I like it. Buy another call here? I mean, this would be the 3rd test of the trend. I don't know if I like I don't like descending wedges that much, but here's the range. That's probably stop loss hunting. So in a no-gravity environment, if I aim my PB to the side and begin tinkling, will the force cause it to rotate like a top? Yes? Opposite the flow, though. If GB goes to 100, I'll pay for a month of Cornichon, or just fuck off instead. I'd be okay with that too. Gamma Max is 14. It also might be getting close to that time of the month. Whose time of the month? Snapchats? What did Carl ask? Oh. So then I could jetpack with farts. How forceful are your farts? Gross. Trend broke. Is Upstart getting pumped or dumped? Right now? It's just coming down with the market, but I wouldn't say it's not coming down on a lot of volume. Obviously, VWAP has stayed fairly elevated. JPM just killed the market for the day. How? They moved their fucking collar again? Didn't I tell you the new collar would be lower? They placed it and then they moved it up. The new collar isn't lower. So I don't know what you're talking about. I called the collar positioning within like actually I called the top of the collar perfectly. But I called the bottom within like $5 of the strike. I mean it's a set number, you know that, right? And then they rolled it up in after hours, but it's a fixed position. It's positive 5% from spot on the on the sold call, and then the spread is -5 and -20. There's no mystery to where they're gonna put it. It's always like so the short call is always out of the money. It was at 38.35, and then they put the top of it's now at like 40.60. I put it in the daily yesterday. It's like 40.60, I don't 4600, and then 30 or 3600 and 3400 at the bottom. I don't remember the exact strike, but Jimmy's still trading in a $17 range. It's not like stop acting like the current price action on it is relevant or a big deal. If there's any gamma exposure from the collar roll, there won't be. It would be T plus 2, correct? Yeah, but there's not gonna be. There can be gamma exposure from the positioning surrounding the collar roll, but not from the collar roll itself. That's not gonna have a significant effect because it's rolled at expiry, right? So the fucking hedge on it's like basically non-existent at that point. Everyone else positioning around the collar and straddling the collar is a whole nother story. Looks like a whole lot of GME volume. 73,000? It's like a reversal. A lot of still missing my put position on Nvidia. Now I can wait to re-enter the downside. Nice. It's really not that much volume. It's just because of how they scale the volume. But it's our second largest today. Our volume's only 3 million today. That update with more volume? No, still 73,000. How confident are you in those 38 35s? I don't know. Took a chance on a breakout of the descending wedge. If it loses stability here at 38 30, I'll probably close him. $18 minutes left. Oh, okay. What's your target to re-enter Nvidia puts? I don't really have an upside target yet. I have to confirm the trend in the market first, but I would probably say, let's see. I don't know if we'll retest 165, but we might retest 160. I don't think 160 is out of the question. I'm not playing the long side though. I'm just gonna wait for the upside to play out, and when I think it's starting to turn around, I'll buy more puts. It could fail earlier than 160, but it might not. What is weird was the timing of those ETF FTDs on upside. The biggest purchases happened near the top of a run, leading into the minutes. Strange timing is all. I mean, it's possible that they wanted to cover the FTDs before volatility of the minutes uh, carried the market higher, right? Because, then they'd have to cover their FTDs at a higher price. So it kind of makes sense. If there's a chance for the market to rise and create more risk in the position, why not cover before that event? I sold my weeklies on Upstart, but I didn't capitulate on Upstart. I still have the rest of my position. I had like $10-14 contracts that I bought yesterday that I sold at like 75 cents each. Pretty close to the top. It'd be really cool if SPX would drop to 38.25 so I can enter a straddle. I don't know if it will though. Maybe I should buy the put side of it now. I just feel like if I do, I'm gonna end up fucking strangling it at 38.30. Maybe that's not that bad. 38.25, 38.30 strangle. Okay. We're like right in the midpoint, so I gotta buy both out of the money, which is nice. What do you think about shorting MSTR as it's up 11.38%? It's super volatile. I'd be careful because you're basically just trying to short Bitcoin right now. I'd check the Bitcoin trend first. Bull put spreads at the top probably aren't bad though, or bear call spreads at the top. Sorry, bull put spreads might not be bad currently, and then bear call spreads at the top. I don't know what Bitcoin looks like right now. That's not BTC. Fuck. Yeah, I'd probably wait. At least let this bounce resolve. What's that look like on the 1 hour? Yeah, maybe see if this gets another shoulder here. Back up into like the 16.9 range. Either you're gonna get a continuation of this trend and it's gonna move up higher, which is definitely possible, or it'll fail at 16,900, in which case that'd probably be a good point to go short MSTR. The spreads can offset the risk from volatility and the if you get yourself enough theta. I don't think SPX finna rip, but I feel like SPX finna bounce back up. I'm glad I entered the straddle there. Important question, is Upstart dead? I don't think so at all, no. I still have my Feb Upstart contracts. Nice, Carl. Yeah, I wouldn't have sold anything longer dated, but I sold the weeklies. Because they're fucking gonna expire in 2 days. Are you gonna expand your Upstart position? Is it limited to 510s? Well, it's limited to the insane amount of shares I have, and I have synthetic longs, but I can't do those in this account. It doesn't have margin. I'll probably buy more on here soon. I sold a couple of GME Gen 20 CSPs with a $15 strike. If the price crashes, you can blame me. I mean, your odds of assignment are fairly slim. We'll be talking about it in almost A greater than 10% drop from our 52-week low? Maybe with... I'd be careful of SLD. If we see a bump in price with our SLD and you can close them for decent profits, I probably would consider it. How likely is it for Upstart to hit / exceed $30 this month? I don't know. Gamma Max is at 22, so right now the chances of us going above that or going above 30 are fairly slim. I think like Gamma Max generally rises roughly, 10 to it can roughly raise 10 to 20% depending on how much call volume comes into a run. And then beyond that, you've got another 10 to 15% of wiggle room. So that would put us kind of close to 30 right now, but Gamma Max might be higher as we approach a period where we're going to run. So looking at Gamma Max now and predicting the price 2 weeks maybe into the future is fucking pointless. Did I do it right? I bought 1,200 GME shares at 1709 yesterday, and I sold them today at 1776. Nice. I mean, you made money. Have you weighed in on the poll in the Pigeon Wheel chat? No, I haven't seen it yet. Aren't you bullish on SPX this week? Yeah, but I closed most of my calls today. I still have some. I have a straddle now at 38. Well, strangle 38.25, 38.30. I don't know. Another slow bleed up. I mean, today the bullishness panned out in the early part of the day. But now we're back in that fucking range where there's no goddamn positioning. So it's just it's just a drag until we get more leverage build up somewhere. I will say that the call side's looking a little bit better after today, but not a lot. I'd still like to see more and targeting higher. The range that call buyers are targeting is narrow. Like no one's really bullish above 3,900 except for that absurdly large 4,000 position for January. About 25% per delta. I figure it's fair enough that even if I get assigned, it's a decent price for entry. I mean, it's a very good price for entry. And the market's done literally nothing. I mean, we moved up just above the gamma flip point today, but then we fell back down. Maybe jobs data tomorrow will bring us some... I doubt it, but maybe some better news. But I'm also bullish into like the next 2 weeks, right? I'm pretty bullish on the market all the way into earnings. Like once we start to hit stride and earnings season into the end of January, beginning of Feb, I'm gonna start to get a lot more bearish. I think we still have some potential, especially with CPI and PPI, to come near that like 39.20, 39.65 range. I'm not well positioned for a test that high. I mean, I guess the strangle I currently have and some out of the money calls, but I can add more. CPI, I believe, is on January 12th. And then PPI is on, is it the next day, 13th? Did they flip again? I think they flipped. Next week's super fucking dead. There's no economic data next week. So we'll just follow positioning for the most part. I don't even think we have Fed speeches next week. So whatever the Fed presidents say this Friday, it's probably going to significantly impact us going into next week. Are you going out to? You're gonna fly out to California to refill your water bottle since you're getting that atmospheric river. I'll wait till it's done. I want to know what the full extent of the supply is before I drain it. How much more bearish can they get at this point? Who? Yeah, we do have SLD. But SLD rebounds generally very quickly. Especially if PPI and CPI are positive, right? It's dumping here in Northern California. Enjoy it. It's probably going to be the only rain you get for the next, like, 6 years, alright? The Fed? I mean, they could try to get more bearish. They could get more hawkish. They could raise their target, their target, like, their 2023 target rate, right? That'd piss people off. What's around CPI is ahead of PPI versus prints from December. Yeah, that's what I thought. I knew it was weird last month. The pigeon wheel pull is not going well. I don't know what it is. I'll look at it later. Oh, fuck it. I'll look at it now. I'm not doing anything for the next 3 minutes, right? Where should a centaur's penis be? It's definitely A. How could anybody get that wrong? SLD is dragged for 4 trading days the last 3 months. What are you talking about? I'm talking about after SLD is completed, the rebound. You know, when it's over, when the deposits are completed and people can leverage again, the rebounds have been bullish and they've been quick. There's gonna be a once in a 5-year snowpack, it feels like, in California. Have you heard of MHOOD liquidity measure? And do you know if it's useful? No. Liquidity by itself isn't a very useful measurement. I've been tinkering with my roundabout and breakout scan V2. And I think I'm ready to share it in the Discord. I don't give a shit, man. The weird part is that the female centaur is B. Well, no, that just makes more sense. What if it's not? What if it's just also A? What's up, Gurk? Barry here again. What's up, Barry? I just want to say thanks for getting me through another day in the office. You got it, man. I called Upstart 1387. Do I win? Sure. What about both A and B? That'd be weird. That'd be 2 penises. Why would they need 2? It's not. Why would that be an evolutionary necessity? Ding ding. The day is done. Oh wait, hold on. Upstart closing at 4:15. This is bullshit, by the way. I think Jean-Claude Van Damme should have to subscribe. That wasn't me. I didn't buy all those shares right then and there to win a bet for $25. So yep, SPX back at the 38.50 level, which is not very interesting. Call side positioning looks fairly strong. Up into like 38.75. We'll see in the morning OI if any's built above that. You know, SPX still trading massively below its like Greek neutrals right now. So using that part of the options chain, like the longer dated part of the options chain to predict any price movement in the near term is pretty fucking useless. Upstart looks like it realized some of its FTDs today. That I would say I have a lot more confidence in us realizing that 1.9 million FTDs today than I did yesterday, obviously. So that looked good. GME also ran up today a little bit. Its FTDs from yesterday may have been deferred as well. It had about 1 million. So if that's the case, it would be true across the entire basket, which it does appear to be to some extent, as most of the basket out and performed the S&P for the day. Fubo really not getting a lot, but a consistent uptrend across the day. I think that's about it. We'll see how positioning moves into tomorrow. Obviously, if Hang Seng continues to move up tonight, we could probably still have fairly positive movement in futures. I think futures found a nice support, or at least the contract in front found some pretty nice support at the 38.68 level. Support at that level is important because we've been unable to break it for the past few weeks. So if we find support there and we can get buyers coming into the upside of that, we could see futures start to move up into tomorrow. I would say that Russell and NASDAQ, so IWM and QQQQ, will still be the largest beneficiaries of that move up, as we still have some contraction in oil and energy prices, and that is pulling back on the growth of S&P. So something to look out for. Maybe if you don't play SPX and you're more interested in playing SPY, then keeping an eye on QQQ or IWM may be a good idea. I would stay away from Dow right now because there's a bit of a slowdown and a shift from growth to value as people lean more positively into cooling inflation. And so we're not seeing a pullback in Dow so much as we're seeing, a lot of stagnation there and a lack of interest in dumping more money into value investments in the near term. I think that'll change as we move through the year. But right now, a slowdown and improvement on Dow. I think that's about it. Yeah. Anybody who picked up straddles, awesome. And I'll see you guys bright and early tomorrow. Have a great night, everyone. Thank you so much for tuning in.
Kinney's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kinney's.
It's yours?
No,
Your mother said she found it in your closet.
I don't know. One of the guys must
Must have what?
Look, Dad, it's
Where
not.
did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, alright? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.
We're not a cult, yo. Just some pickle theme fuckers, not a cult, no. Like them AMC suckers, not a cult, bro.
Sit, Krian, sit. Good dog.
Hydrate!
Hydrate!
Did you get any of that?
It's a good show.
Not an advisor. Frigulon.